Testing 1, 2. Hello, testing. Can you guys see me, hear me? Hello, Ryan, can you hear me? Hey, Ryan, thanks for letting me know. I'm new to this technology, so let me be apologetic profusely there. You can see me, no problem, Ryan? Awesome, thank you. Let me just test my screen here. Give me a second here. Okay, let's test my screen capabilities. And here, got okay, so I'm going to come back to you, Ryan. Okay, Ryan, are you there? Okay, cool. Okay, I'm going to use you as a test guinea pig again. I'm going to see if you can see can you see my screen right now? Can you see my screen okay, Ryan? Just give me a second here. There's a lot going on here. Pro account. Isaac's online. How you doing, Isaac? My problem is I can't see the chat. Okay, I can see the chat now. Yay. Okay. Okay, can you guys see my very confusing this Zoom trying to look for stuff. Okay, I know that I'm gonna kill my email here. Okay. I'm just looking to see if I can see you guys. Can you make yourself Isaac, if you could put yourself on audio? Because I know parts of this is running. Okay. Okay. So are you there, Isaac? Okay, so there's three of us. I see Ryan's responses. Thanks, Ryan. Sorry, this is a new technology that I'm using. I'm used to using GoToMeeting, but this is a new one, Zoom. Okay. Okay.
I'm here, Brian, if you can hear me.
I can hear you, Brian. Thanks, Isaac. I can hear you just fine.
Good.
Okay, can you see my screen with your PDFs?
I do, yes, sir.
Okay, good. Okay, so we're ready to go. It's kind of weird because I can't share my screen and see the chat mode at the same time.
Oh.
Yeah, that's not a good deal.
I have that document. You want me to share my screen so you can talk or chat?
No, it's something that I'm going to have to get fixed at this company. It's pretty crappy if they can't allow you to do a chat
Okay.
at the same time. It's nothing to do with you.
By the way, do you hear a loud buzz beside me?
Hang on here. No, I'm at full volume.
Okay, good, because that's my server humming in the background.
Oh, really? Eh? Well,
Yeah.
you got that video when it starts up. It's supposed to be loud, but it's supposed to. I don't know what yours is the. Can you type something up, Isaac?
Where would I type?
There's a chat box somewhere.
Um,
I'm just trying to get this thing working. This is really bad. I have no idea. Okay, so if I stop sharing, I could see the chat. There should be a chat option at the bottom somewhere. Ryan's been
I
responding.
see it. Yeah. Okay.
Okay,
So
just
okay, I got Ryan Wong here.
yeah, he's one of the participants. That's right.
Okay.
Well, just type something in the chat. Just see if we can correspond here.
Okay.
And can you see when I share my screen? You can see the chat at the same time.
I can see the chat and I can see your screen.
Yeah, but can you see me on camera?
Yep.
Okay, cool. Okay, let's try something. Bizarre. Okay, so when I do a share screen, we do the PDF. Okay, so you could see that, no problem, right?
Yep.
Okay. Okay. I got Ron now coming aboard, so I can see everybody there. This could accommodate up to 50 people, the account that I got. Bizarre. Okay, so I'm going to have to probably flip in between the chat mode and sharing screens. Okay, it doesn't matter. Just was trying to figure that out. All right, so sorry about the confusion there. So Isaac, before we start, how's your server going? Because just so everybody knows, you just bought was it an I can't remember.
R710 Dell.
And you just got that on Saturday.
I did, yeah.
And how's the experience so far with it?
Well, I don't know what the hell I'm doing with it. I've downloaded all the software I think I need for it.
Right.
But knowing me, I always miss something. So if you say something, so I've got, I actually got, along with, hold on a second.
Yeah, no problem.
Over here. So I've got there's like an administration software. There's something called iDRAC Lifecycle Controller.
Okay.
I just downloaded that from the Dell server. And then I've got Ubuntu, which I was thinking of installing, Ubuntu 16. Okay, and I assumed I was going to be putting Redis on it.
Yeah, that'll work on anything.
What's that?
That will work on anything. You just got to rebuild it.
Oh.
Or you could do use one of the package managers when you install on your OS if you're using Linux.
Okay, so I do. By the way, just so you know, I did. Along with the server, I did buy a MacBook Pro as well. So
oh wow! Look at you.
It's a couple years old, but it's got the El Capitan on it.
Oh, cool.
I've already installed my Interactive Broker platform on it, but that's the only thing I've installed. The rest of it I can't. It's been so long since I've been on a Mac, Ryan.
Yeah, I know.
It's a bit of a fish out of water a little bit.
No, I know. Well, congrats for making the step onto Mac.
Yeah. Well, my G4 is still running 17 years later.
Yeah. I mean, you've seen what's been happening since Friday with that WannaCry virus thing, that hack attack, only on Windows.
Yeah, that I was literally driving from the Mac shop on Yonge Street when I heard that news. So
yeah.
foreboding.
Well, the thing is, I mean, don't get complacent because you're either on Mac or Linux. But a lot of these NSA tools that were ripped off in April were targeted towards Windows. But as I said, just don't get complacent with being on Mac or Linux.
No, I never am.
Cool. So we'll talk about your PDFs. I think they're really good even for me, they're really good. And what you've done and how you presented them were awesome. I do realize my screens, my camera's going dark here.
Yeah.
something's going on with the lighting or something. I don't know with the camera, but what can I do?
Well, you're in front of the window too, right?
Yes. I'm not sure if I can rearrange that.
It'd be great if you're facing the other way, so the light's shining on you.
Yeah, me facing the other way, there's nothing there. So I think I'm okay for now.
Okay.
How I've done it. What was I saying? There's a lot of things. I'm just coming out of the thing I've been working on for the last 2-3 months. So I'm going to start working on installing a virtual box, like a virtual machine environment with Linux. Now, you haven't installed your Linux version yet, right?
No.
Okay, I just want you to know I've done some research on that server. That server is really geared towards virtualization.
That's what I thought. I was hoping you'd say that because I did download the virtual.
That's why I was thinking you might want to load that first, the Zen, Z-E-N-D, so everybody knows that. That's an open source piece of software for setting up for virtualization. Okay. And start with that, and then just maybe create one VM with a basic Linux, or if you want, even a Windows, dare I say. And because I'm assuming the server, is it really for production or is it for live testing or just testing?
I couldn't tell you.
Well, I mean, you didn't spend a lot of money on it, did you? About $500 or so?
Actually, I got it for 700 plus tax.
Right. How many gigs this puppy got? Like 48, was it, or 32?
Well, there's three raids on it. In terms of the gigs,
because that's what you really want is the gigs.
It's on the tip of my tongue. I wrote it all down.
Yeah, don't worry about it. I think I saw 32, 48. I think yours is a 48 gig. That's quite a bit of memory.
Yeah.
Because we're like, if you're going to follow the same architecture I'm using, everything's going to be on Redis, everything. And the more RAM you have, the better. The throughput on the cores and all that's kind of important, but because if you're just starting out, it might be a decent server to go with. But a lot of the throughput is going to be, it's going to be mostly memory that you'll be needing as a priority. But as you start to scale up, depending upon how many assets you're going to watch, how many strategies you're going to put on the thing, then throughput's going to matter. But with what you bought, there's a lot of flexibility to it for the new server. So you've done well with that server, it looks like. But I don't know if you've seen the videos I posted in the last few days on Redis 4 with a new version, because what they've done, it's the most brilliant architecting I've seen compared to the newer databases. So what they've done with Redis 4 is they've kept the core product as like a core server. So when you want to add on new features like the neural net as well as the graph database module, they're totally separate. So you start the server session for Redis, and then at the same time you can run the module in parallel on top of the server. So the nice thing about it is it keeps it very light, but yet you're not starting up one server for a database with all these extra features that you're not going to use. So it keeps the database really small. And as you add on the different modules that you want for the different types of features, like let's say for neural net or for the graph, you just add it on for that session of that database instance. It's really well designed, and I've seen some of the newer databases out there, and they're just nowhere as good as what Redis has to offer. And apparently there's a company called Redis Labs now they're huge now. They've got all the banks are moving towards Redis, and they're using the Redis private cloud solution, or Redis Labs private solution. So I'm not sure where this thing's going to go, but with Redis Labs, they also have this flash memory option as well. So you can install Redis onto flash memory, and you can get like amazing throughput with Redis 4. So you can build on top of that like new machine learning stuff. And I put up a bunch of videos on it in the last week or so. So it's pretty exciting where Redis is.
I got a quick question, sort of, Brian. Side topic. I got a headset on. I'm trying to get the mic through the headset, and it's coming from the actual computer, and I'm trying to reverse it. Do you know where I should go for that setting?
I have no idea.
Okay, it's in my control panel. I'm just trying to find it.
Oh, are you on a Mac or on a Windows?
Right now I'm on my my PC laptop because it's got a webcam. So.
Oh, don't worry about the webcam, man. Don't worry about it. It's not.
I'm not worried about the webcam. I'm just trying to get the microphone to work through the headset.
Oh well, you're doing fine.
Okay. All right.
I wouldn't worry about it.
Just having a little trouble hearing you. That's all.
Oh, okay. Is anyone else having some audio problems at my end hearing what I'm saying? Because I'm on a. So Ryan, you're hearing problems? Okay, maybe it's my mic. Hang on here. How are we now?
Oh, that's better.
Okay, yeah, because I'm here. I got a microphone here, so it's right beside me. So it was about 5 or 10 feet away. So that's my fault. Sorry about that.
It's much better.
Okay, can you hear me? Okay, still now?
Yep. Well, not as good as a second ago, but you know.
Yeah. Okay, that's why it's got to be right here. All right. Okay. So we're almost ready to go. Okay. So what I was thinking, Isaac, is just go through your PDF.
Okay.
And we can just do an open. Basically a
open dialogue.
Yeah, basic Q&A with what you're doing, what I'm doing, and kind of share the ideas.
Sure.
So we got Serge and Shalom joining us. Welcome, guys. Got here my mic because you guys can hear me better. Hang on here. Okay, I'm going to start a recording session here. My Zoom is recording, so let me just get the recording going here.
If you want me to crank my mic, I can.
What's that?
If you want me to turn up my microphone, I can.
Sure. I mean, you're okay for now.
Okay.
Okay. So, so just so everybody knows, before I get started with the Zoom, I'm going to rely on you, Isaac, if I can, just to moderate the chat. If somebody's got a question, because I won't be able to see it while I'm sharing the screen with your PDF.
Yeah, no problem. I'll pay attention to it.
Okay. Cool. Okay. So let me pull up the share the screen. Okay, there we go. Okay, you guys can see that okay, right? Okay, I'm going to start my recorder now. Okay, I'm going to give you a countdown. 5, 4, 3, 2, 1. Hey, everybody. Welcome to our first edition of this quant analytics member stuff and sharing some ideas here. Okay, so we got Isaac. Welcome, Isaac.
Hello.
How you doing? So, Isaac, you came through my Toronto meetup group that I took over in February in the Toronto Forex retail Forex trading meetup. Yeah. And you came to the first one, which we had, I think it was in, was it March or, yeah, I think it was, no, April.
April, yeah.
Yeah, and you came aboard.
I found the group in March, and then I went to the meeting.
Right. So you became a member and all that, and we've had the second. We've been collaborating a little bit through the meetings and stuff. So you just bought your first server, the Dell was it R710. 710. Okay.
Yeah.
And you came up with some ideas on where you want to go with your trading infrastructure and strategies with these PDFs that we're going to talk about tonight, which I think is great because I love how you presented it. And I think these are going to be really useful for people. You can get that on my website. If you need a link, just let me know and I'll get it to you. So we got 3 PDFs. So I know it looks like one PDF was for marketing purposes. Am I correct in stating that?
Yeah, the one you're seeing in front of you is more of a kind of give you like an overview.
Right. Okay. I'm thinking. So why don't we start with this one? And we'll go over it collaboratively. I know there's a couple of you on there. So just keep your eyes, if you can, Isaac, on the chat, because I can't see it right now.
Okay, I'm seeing something. Hold on. I'm not seeing a chat right now. I'm seeing a convert, create PDF, EDP, comment, combine files thing.
Okay, that's probably me on the PDFs. But let's go through the first PDF, and then we'll do a couple of questions for people that may have some questions on this.
Sure.
Okay, so what you've done is you came back with different types of analysis that you want to present and use within your own trading environment, correct?
Mm-hmm.
So you're going to use fundamental analysis, technical analysis, sentiment, some psychographic, which I couldn't quite pick up, and obviously the quantitative as well.
So basically, the psychographic aspect of it is just being able to understand on a trading chart, for example, what like a novice move would be. Like there's something called a novice gap and a pro gap.
Right. So you're looking at more like a human trader element to it as opposed to being 100% systematic. Yeah. I just so you know, with my membership now, I've just every day I do my usual historical, or I should say daily consumption of Bloomberg of just going through all the charts that they put up on the news app. And I've got a piece of technology that I developed that will go through it and analyze those little charts and the topics of those charts and be able to guess what the next set of moves would be. So I highlight maybe 3 to 5 a day on that. And
wow.
I'll tell you, the one I just put up today, which was on the Taiwan dollar and the Taiwan stock exchange about a month ago, was another bang on move from this thing. And I did another one about a week ago with the Brazilian real, which went up as well. I think we talked about that last Monday, remember?
Yeah.
There was a 3% move on that. So this little system's kind of working as a first element on getting headline news and trying to project those moves, and not just with the Brazilian real, but now it's also kind of forecasted in the right way with the Taiwan market. And Taiwan has now been the strongest currency on the planet in the last week or two, and the what do you call it? The stock exchange has been very strong as well. The German Bund and the Taiwanese were very, very strong in the last month. And I think we've talked about it before, where you can use ETF flow, outflow and inflow of specific ETFs as a way to measure that, because there's so much money now being put into ETFs that it's a really, really powerful indicator that you can use to forecast where that institutional money is going to go. And about a month ago, I put up a little alert saying it's all moving to Taiwan. A month later, it's now proven to be the most profitable move you could have done in the last month.
Wow.
So this methodology seems to be working really well. And I got the second confirmation last week when we talked about the Brazilian real as well.
What do you call that tool? What are you doing?
Well, basically what I'm doing is, hang on, let me just try to pull up my browser here. Hang on here. I don't remember. I'm going to do a stop share. So let me just see if there's any questions in the...
Hi, Isaac. What's the best way to get a copy of the PDF?
Yeah, it's on the website. Yeah, it's on the website. So let me just pull up the browser and we'll go from there, and I could show you all that cool stuff. Okay.
Just to kind of like a heads up on that PDF.
Yeah, go ahead.
You got to kind of know a little bit about, like, if you're a total newbie at trading, that a lot of it might not make a lot of sense to you.
Right.
But you got to have some kind of even some kind of background in whether you're just learning in school or something on it, just something to give you something to go by.
Yeah, exactly. I'm just trying to think of where I put those PDFs. Because I changed my event page today, so I might have to repost that in the next couple hours. Just remind me to do that, and I'll get it up on the page or on my website. Okay.
I saw a debate online a while, not too long ago, about who are the most successful traders, fundamental traders or technical traders.
Right.
And really, it's a mixed bag. You can be in either camp and be successful. I guess it's just a matter of your background and where you've been learning. It's all good. It's just a matter of how much you can leverage both sides. Yeah,
it does. Okay, so I've got my browser here. You guys can see my browser okay? My website?
Yeah.
Okay, cool. All right, so let's talk about what I do now. Every day, I just put this new workflow every day on my other stuff I do. I'm rearranging stuff and reprioritizing stuff, just basically, getting rid of like counterproductive stuff that's not useful for me. So one of the big things I've been doing this for a long time, is using my Instagram account, where I post a lot of charts every day. You'll see here I've got over 12,500 postings. I've been doing this for a year. So what I'm doing, Isaac and everybody else, is I've been running these charts into this little algorithm that I've written, and it's kind of using a little bit of machine learning and using sentiment and whatnot to guess which out of all these daily charts, which will give you the most, like it's just looking for the most popular set of views. So I could go into my back end and look at my analytics, seeing which are the most popular views of these charts. And that's what I use to post to my membership on what it thinks are the most likely things that can be used for market direction. And as I said, the two ones that really came out really well in the last month was that Brazilian real move and this Taiwanese move as well. So that's how I'm kind of doing it, to answer your question, Isaac. So let me go back to my PDFs. Where is now? Can you guys see my PDF? Okay. Or can you see the PDF? Okay.
No.
No. Okay. I gotta share my screen again. Okay, hang on here. Okay, can you see it now?
Question from Ryan.
Yep.
How do you trade these markets where like not all brokers are posting them?
Right. Yeah, that's fair. A good way to do that is, obviously these are ETF flows that I'm using. And as it says, like ETFs are now probably the most popular asset class in the last 2 years, because they're the only ones that derive real yield in the last 2 years. So a lot of pension funds and a lot of big institutional players are buying up and investing into ETFs. And the two big companies you can watch for are either Vanguard or what's the other one? BlackRock. And if you go online, you can look for ETFs that really specialize in anything. And typically what you can do is you can invest into those ETFs based upon region. You can also invest into ETFs based upon sector. And then you can also invest into an ETF that specializes in a region within a sector. So if you know Taiwan is going to be strong, you can invest into a general stock index for Taiwan, or another ETF that may focus on just the Taiwanese dollar, and same with the real as well. Because ETFs is an interesting asset class to invest into. The problem is now the last few weeks is a lot of talk, and you have to really know what to invest into when it comes to ETFs, because the underlying of that ETF may have really good performance for a while, but depending upon the mix of the ETF. Hang on here, I got a chat. Oh, I get more questions from people. Cool.
As an analogy to that,
yeah, go ahead.
If you were investing, let's say you're playing on the S&P. Out of those 500 stocks that are in that, there's probably less than 30, and actually less than 20 that are actually, like, it's the 80-20 rule that they
That's
have.
right. Yeah. I was just going to say, it's kind of related to Ryan's question you just asked. If you look at the S&P 500, just generally, it's only going up because of the 5 best performing stocks, which is Amazon, the FANG, Facebook, Apple, sort of Netflix, Alpha, Google, and those stocks are doing really well. Everything else is kind of in a range bound momentum. So it's the same thing with ETFs. You got to make sure that the ETFs are properly balanced to get the true performance. That's one way of looking at it. And the other thing you have to also analyze on the ETF front is you got to make sure that those stocks that are part of that mix of that ETF are usually going to be put in there based upon some lagging performance. So maybe a month ago that particular stock did well, but today that ETF may not be doing so well because that large portion of that mix of the ETF may be underperforming something else. So you have to be very careful in what you're investing into.
There's a website, Brian. I don't know if you're familiar with it. ETFDB.com.
Yeah, I know of it. Yeah,
it looks like it's a good what you're looking for, I guess.
Yeah, but here's the thing. These are just ideas, okay? Because a lot of the brokers out there will not allow you. I mean, outside of IB is probably a good one to go with, because I do know that they have ETFs that you can invest within. but it's just you can also use this just as a way to watch performance on particular sectors, and that's what a lot of institutional players are now doing. They're watching ETF flow as a way to as an indicator on performance on a particular sector. So Ron just asked, can you recommend cost-effective sources from ETF constituent and weight? I'm getting mine from an ETF underwriter. A bummer. As I said, for anybody, including Ron, the best ETFs globally, as in terms of size of the market that they represent out of the whole ETF industry, you just follow either Vanguard or BlackRock. And the other one you may want to watch, the third big player, is Oaktree as well. So those, if you watch those three ETF companies, those are probably your best bet to watch or invest into. But there's always that caveat. You got to make sure you know what you're investing into. So that's what I'm doing, Ron, with the Isaac, with what we're doing with this ETF stuff.
Do you follow cycles at all, like seasonal and things like that?
Yeah, let's talk about that in a little bit. Yeah, because okay, so Ron was asking about constituents as well. I'm assuming constituents, you're referring to the assets as part of that mix of what's part of the entire portfolio of that ETF. That's something that you're going to have to dig into. And I think with you, what you mentioned, Isaac, with the ETF DB, it has the companies in there, right?
Yeah. Mm-hmm.
So you would have to do your research, and a lot of the professionals tell you to do that. But the problem is that you got to keep on top of it, because you may get today Facebook maybe 30-40% of a particular ETF, and it's doing great today, but in a week, 2 weeks, a month from now, it may be underperforming. So the whole ETF doesn't perform as well, right? So you got to be aware of these things. Okay, so did I answer your question, Isaac, on how I'm doing this ETF business, or sorry, this business of how I am employing the Bloomberg charts and stuff?
Well, I know that you're doing. I'm not really sure. I'm not really sure. I know how you're, like, what you're doing.
I can't. For me to get into specifics, all it really comes down to just popularity on what are the most read charts in that Instagram account for that cycle of Bloomberg charts. Right. That's all I'm doing.
Okay. And
there's a few other little things that I'm doing as well. So hopefully I've answered your question, Ron. But let's get back to your PDFs, Isaac. So okay, you were talking about fundamental, technical, and you just brought up the fact of which one's better for performance on technical or fundamental, correct?
It's not really which one's better. How do you use each?
Okay. The way I do it, and I'm planning to do it, is you have fundamental analysis. If you watch a lot of the Bloomberg stuff, you'll notice that there's a lot of PMI, a lot of forward-looking data that they use to measure how things will play out. Right now, they just did China last week was China, manufacturing, consumer confidence. So they're using a lot of economic indicators for forward-looking data to figure out ways to invest into. So obviously that's fundamental. So that's 80% of your effort in analyzing the markets are for that, to look for those trading ideas on where you're going to invest into in the next week or whatever your next time horizon will be for an investment or a trading opportunity. But where technical analysis comes in is this is one thing I love about the Bloomberg News app, is they just started in the last few months, started posting technical indicator analysis on, using RSI, moving averages, trend line, all these classic technical indicators that they use as part of when you have an idea, that you can use these technical indicators as a way to confirm basically how to time that opportunity and be able to invest and open up the trade using those technical analysis indicators.
Right.
So that's where technical analysis comes in a really powerful.
Those indicators that you mentioned, those are all like lagging indicators. I would assume that you would use those on higher time frames, for example. You wouldn't use them for like 30-minute charts or.
No, like a weekly or a monthly chart.
Yeah, exactly.
Right, but the technical indicators that Bloomberg uses, as well as I'm planning to use, you just use them as a way to confirm your timing on that position that you want to open up on. You follow me?
Right. Yeah.
And that's where technical analysis is perfect for. And you can also do the same thing with closing out a position as well. The problem is with typical retail traders is they don't really use or believe in fundamental analysis, which is fine, but that's why a lot of them fail, is because they use only technical analysis as a way to generate a trading idea. And that's wrong, because what they're essentially doing is they're just chasing stock opportunities that they see on a chart. And that opportunity has come and gone probably within the last week or even 30 days or 3 months.
Yeah. I mean, again, those indicators, those wouldn't be for like day traders. Those would be for people who are doing swing trades and those positions.
Right. But another good example of when to go into day trading, saying that day trading doesn't work. I mean, when Trump came into power in November, we knew that the market was going up and had a 25% return between November up until probably the last week or two, right? So all the time you could have been day trading that opportunity. But now in the last few weeks, S&P 500 has been hitting this range bound and hasn't been breaking out. So now we go back to the old way of analyzing the market using fundamental, looking for the new opportunities to get maximum return. And that's where you start looking at opportunities like in Taiwan or Brazil or whatever else comes out, because those markets are outperforming the S&P 500.
Right.
So if
but again, even with those Trump moves, you wouldn't be using those lagging indicators for things like that.
No. But what I'm saying is, if you're referring to the technical analysis indicators, those are just used for timing. That's it. Timing, nothing else. You're not using those to generate trading ideas. You're using the fundamental analysis and the economics or the econometric data that you see as ways to generate new trading ideas to open up new trading opportunities as you see them. But the problem is, for a lot of traders, they're not looking outside the US. They're not looking outside of Western Europe. And there's, like, when you look at Asia and Central America, that's where the opportunities are going to be over the next year. Okay, I think we just got a question from Ryan. Aren't chart patterns still useful to find zones of distribution and accumulation of trades? Okay, that's getting more into micro trading. What we're talking about right now is just using fundamentals just for looking for trading ideas. What Ryan's asking about is things for like when you have a position, you start wanting to look at when to, let's say you put on a position, right? You put on a position, you may want to roll up the number of positions to maximize your opportunity for profit as those trades run up, right? In a profitable momentum, upward momentum basis, correct? And then once you start looking at distribution and returns and all that stuff, that's when you start using that sort of stuff. But generally right now, what we're speaking of are just looking for those trading ideas to get maximum return. If that makes sense, Ryan. Okay, says yeah. Okay, cool. So going back to your fundamentals, I think we covered the fundamentals pretty good. Always trying to look for forward-looking data, and then using the technical analysis for timing.
Now, in terms of tools, forward-looking tools, the only things I've ever considered to be forward-looking would be things like trend lines and, say, Fibonacci's.
Yeah, RSI is a good one. Moving average is another powerful one. Yeah. There's a lot of them, but the ones that I've seen on Bloomberg a lot is RSI, moving average, and trend line. That's it. Keep it simple, right? Stupid and simple. And the RSI can be used for overbought and underbought, oversold, and opportunities. Because right now, if you look at Europe, is Europe in an overbought situation? Or, I mean, that's where RSI is really good. And that can come back to what Ryan was asking about on the volume levels and distribution for the volumes of the investors going into those assets. And if they're going to pull out or not. And again, you can also use ETF flow for that too as well. The inflow.
ETF what? Sorry?
What's that?
You said you could also use the ETF something?
ETF inflow and outflow.
Oh, okay.
Right. That's what a lot of professionals seem to be using, which has been fairly a new trend over the last probably since the fall. They use that as another indicator because there's virtually no return anywhere. There's no yield.
Are you talking about when, say, a fund manager is moving his portfolio in and out of one into another.
Right.
Right. Okay.
So you're watching, let's say I put up a video on, let's say China has been hoarding iron ore. Okay. So it's not a trade, but that news event means now a number of things get impacted. If China is hoarding iron ore, back in the 2008, they were doing the same thing with copper. They were hoarding it. So they're keeping it in supply for a lot of the manufacturers. So when there's a huge new demand coming about from wherever to start processing that iron ore, that will say a couple of things. The Chinese manufacturing economy is now getting back into production. Also, because let's say with Australia supplying that iron ore, which pretty well China gets all of its iron ore from Australia, that's going to have a huge impact on the Australian dollar, and it's also going to have an impact on the Australian economy. So that's now two new opportunities that you could play, where you could start trading and shorting the Australian dollar, and you can also short the Australian markets as well. And you can also confirm that through the Australian statistics that come back out of the government out of Australia. So again, that's where the fundamentals can come really in a powerful way to watch what's happening in Australia. So that's that right there is three trading opportunities. Hang on for a sec, Ron. So that's three trading opportunities. So if you know that China's hoarding that iron ore, it's also going to have an impact on the companies that go in and manufacture and process that iron ore within Australia. Now, if you know that as a factor, where a lot of those companies are now listed on within Europe, or they could be listed on in London, right? So you now know that those companies are going to be impacted by this news event, right? So if you know that, you can now start shorting the ETF for the stocks STOXX. Let me show you that in a minute. I'm going to go back to my browser. Just give me a second here. Just going to load up my browser now. Can you guys see my browser?
Yeah.
Okay, cool. Okay, so if you go to stocks.com, let me just go to do this. So for instance, if you look up stocks mining as an example, this is another way you can watch this. So you have the stocks 600, right? So now you can watch the stocks mining index, right? And you know that that's going to be majorly impacted by that news event from China. So now you can short this. And it's probably going to have a short on also on the stock index as well, the stock 600. So these are just trading ideas I'm giving you. That's what we're speaking of, is trading ideas. And if you know these type of relationships, you can build automated processes around it. You follow me?
Mm-hmm.
Because now you know, like I just given you probably 3 to 4 trading opportunities just from one news event that's based upon the Chinese economy for their supply of iron ore. Just one trade. One trade gives you 4. And then we haven't even talked about how it can impact the US and how it can impact Canada. Because you can also talk about oil, impact that trades on oil or news events of oil can impact other news events or other new trading opportunities globally throughout the world. Does that make sense?
Yeah. Okay,
cool. So let's go back to your PDS. I think there was a question from Ron. Hang on here. Let me just. So Ron, how do you measure ETF inflow outflow by numbers of shares of assets under management? I think what you got to watch for is really the. That's a tough one, because you have to. If you if you know you're going to watch Vanguard, for instance. Let me go back to my browser here, and if I load up BlackRock as an example. So let's say we want to watch the flow of. I just tried this out, the Yahoo Finance. It wasn't working properly. and we go to that database called ETFDB that Isaac identified. Or so let's say, for example, we want to watch what kind of ETF you want to watch? Mining, oil? You want to do mining for stock 600 for Europe?
Sure.
Okay, let's do that. So as an example, one way you could do that is going back to Yahoo Finance. So we got to get an example of a good ETF we can watch. Okay, so let's say, see right here we have returns overview, but what we're looking for is a particular. So let's say this one right here, XME. That's a spider. So that's going to be, I believe it is from BlackRock, right? So here you're going to get some information about the mix of the assets within that ETF. See here, you can see the volume right there. So if we can find out more information about this particular ETF right from BlackRock, let's say, because you're going to have to do a little digging. But if we can get our data and automate processes around this type of data, we can easily watch that ETF flow. So I'm sure if I dug deep for this ETF on Google, let's see if we can find any info as an example. XME. Okay, here we go. So here's the Yahoo Finance for this particular one. There's a couple of things we can watch because we can stream data and do requests to Yahoo Finance through a Python script of some kind. We can always watch our performance on the beta, day range. So there's some little fundamental data that you can probably watch that through Yahoo Finance and watch the flow on a daily basis or even maybe on a hourly basis. So it's just one way, just one idea, just off the top of my head. I'm hoping that makes sense. So let me go back to any more questions.
You'd put all of these through like watch list parameters, wouldn't you? You wouldn't.
Absolutely. That's what you're doing. What you're really doing is you're collecting a number of assets that you're going to watch on an intraday basis. And you're going to have probably 300-400 assets that you're going to watch. And that's where Redis comes in, where you can store that data. So Ron asks, how do you, by number of shares of AUM, SPY? I'm not sure what you're referring to, Ron, but I'm hoping I've already answered your question. So let's go back to your PDF, Isaac. So I'm just giving you some examples on how you can approach the fundamental data with a technical analysis. So we've kind of used that. And would you think, Isaac, that we've kind of already covered the sentiment analysis as a way through news that you can use as an example to?
I'd say so, yeah.
Yeah, because like you have the China iron ore event where they're hoarding that supply and just has so much impact and so many other trading opportunities. The key here is you got to understand those patterns and understand those relationships. And again, the only way you will be able to follow those is through understanding the Bloomberg News app, because the only way you'll really understand that is by going through it yourself, putting the time in and understanding those charts, because that's where the key comes in. And they'll just talk about these events day and night, 24/7. And that's what you're doing as a trader. And that's what you're looking for as an opportunity for trading. And what you're trying to do is when you put X amount of dollars on the line, you really want to go in, obviously, and get a higher return at the lowest risk. And with this type of knowledge, I think you're kind of reducing your risk because it's a proven set of relationships here. I think. But again, I could be wrong. But this is what I'm planning to automate within my trading.
What you're doing also, Brian, is you're actually touching into understanding the relationship in different economies.
Right.
Okay, and different industries. So your
exactly.
so your macro fundamentals are a large part of where you want to do a lot of your research.
Exactly. Yeah. But the idea here is to automate as much as you can of that. But at first you have to understand the relationship. You have to also understand the patterns as well. Because why would you put $100 in, let's say, into the US markets S&P, and it's going to go into a range mode for the next couple of weeks. But you know full well that you probably could get a better return putting money into Taiwan, and you're going to get a higher return. And everybody else is going to be doing it as well. You know what I'm saying?
Yep.
And unfortunately, a lot of people don't see it that way because they decide not to use the fundamental analysis as the leading indicator to make those trading decisions. Because what I just presented is just one news event per day, and that's just one that drives the markets. That's why it caught it, because it was a major news headline that heavily impacted the market for that day. Last week, I think we talked about it, Isaac, where the LME said we have an oversupply of nickel and copper, and as a result, the prices of those collapsed. The futures market, the options market, got killed on the Friday, and that's what brought down the whole market on Friday. You know what I mean? Or not last Friday, but the previous Friday. And that one news event, it has that much impact. And when you're after those headline news events and being able to forecast them and put trades based around that, that's where you can maximize your trading opportunity. Unfortunately, again, a lot of people don't see it.
I think the challenge for a lot of people, Brian, is that they're familiar with the North American markets, and since they're not with the Asian markets and the European markets as much, they shy away from it.
That's fine, but the problem is if you're shying away from North American markets, you're going to make pennies. But if you start trading where the markets are, where the investment and trading opportunities are going to be for higher return, you're better off to trade in those markets, which will be, for now, Latin America and Asia. That's where the growth is.
Okay.
I mean, you want to put $1 on a trade and make maybe 5 cents, or do you want to put $1 on a trade and maybe make 20 cents? You know what I mean? That's the difference that we're talking. And that's what, if you want to be able to broaden your horizons for the trading opportunity, you have to get out of that mode of looking at only North America, or only look at Europe or oil or whatever, because that's all you know. We live in a world of automation. You can watch the markets and all these assets in such not nearly infinite numbers. You just got to understand the patterns. That's it. So again, I think we covered all these three: the fundamental, technical for the timing, and the sentiment as just a number of things, because the sentiment is what we're talking about, news. And that's what really drives the markets for maximum return. Like I said, you can get maybe 1-2% return. You're happy with that? Okay. I'm more after 15-20% moves. So I guess with a psychographic, I mean, we just got a question here. Hang on. Okay, hang on here. So Ryan asks, so Brian, do you have a mental mind gap of how commodities affect all countries, or just experience? I'm only basing it upon my experience with looking at Bloomberg News app. And when you look at overall the commodity play, you can, as I said, there was that event a few Fridays ago where the LME, the London Metal Exchange, put out these news items saying we have an oversupply of nickel and copper, knowing that has a global impact on many, many different industries. Why? Because everybody watches the LME. That's where a lot of traders will watch, where they will price or make trades based upon the central repository of where commodities are, and that's in the LME, the London Metal Exchange. So hopefully I'll answer that question.
It's called the LME?
LME. Here, I'll show you. And let me just get back to my screen here. Okay, let me get to my browser. Okay, so what we're looking at is the LME. So if you go to Google LME, call here London Metal Exchange. So you can see here, you can get pricing, you can get charting on something like copper, and copper is an industrial metal that you can watch. Actually, there's Kitco as well as another one. LME you have to register for, but I just discovered Kitco, which is another commodity player. So let's say if you want to watch Kitco copper, and it's going to give you the spot price as well. So you get the charting and all that. And here you can get all the major commodities. Copper, aluminum, nickel are the leading industrial metals to watch. And zinc as well can do well. If you want to do well, you watch these little metals for industrial. And you can watch these in real time, and that will reflect basically how the global market is putting in orders for these metals for industry, for their industrial activity. And the big driver obviously is going to be China for that.
You mentioned iron ore in China.
Yeah.
Something else that China dominates, and they got like 90% of the world's supply, is rare, what do you call it, rare earth elements or something.
Yeah, well, they own that market, and that's where the states are they're panicking, because if there's, let's say, a trade war with China can say, sorry, we're not supplying any more of these elements, and that's going to screw up a lot of the American products, because Apple depends on it, Samsung depends on it for cellular, for TV, for all kinds of electronic devices. So they're trying to open up their own supply in the U.S. out of this little company. I can't remember the name of them, but that was about 2 years ago. That was a panic there, but who knows where it's going to be at. But that will be.
The ironic thing was it was an American company that the Chinese bought. That was like the.
Oh, it did. It was called Myo something. They're out of California, and they own a small supply, but they were purely only. They control the American supply.
Yeah.
I didn't know China. I do remember hearing that China did buy that company. So Ryan asked, so Brian, do you have are these future prices? No, these are spot prices. This is where the futures market it gets a lot of their demand and supply from. But you can also obviously watch the CME as well, the commodities in the CME as well. But this is another one that is used globally, is from the LME as the industry standard, as far as I know. So I'm not sure if that helps you out. But this can be used and will greatly impact stocks. Because if a news event, this can spook the market overall, can spook a industry by whatever industry that depends on aluminum. Another good example, you remember on Friday that WannaCry hack event? It had a huge impact on Bitcoin, right? And I don't know if you know, but cybersecurity companies got a pop out of that as well. So again, news does have a big impact on the markets.
I actually got into Bitcoin yesterday, believe it or not.
If you buy the dip, I did. It'll come back, dude. That ass is going to keep going up. I hope you didn't buy it because you got attacked by this ransomware stuff. Did you?
No, I didn't. I bought it simply because I was able to get it at wholesale cost.
Oh, well, lucky you.
Yeah.
Okay, let's get back to your PDFs. Okay, so again, we've covered the first three: fundamental, technical, and sentiment, right? Yeah. Okay, so if we look at psychographic, I'd imagine the idea there is if you're developing your own trading scripts, it's quite. I mean, you're setting rules. It's like everything you develop based on, and you're pricing things around that. It's going to be rules based. So as long as you have those rules in place, that kind of is applicable to psychographics overall. But
yeah, it is.
But I do still think that there still has to be that human element to do exactly what we're doing.
Well, I'm specifically thinking of the fear and greed automatic response people have.
Yeah. But again, that's where the rules base comes in. But for instance, if there's that saying, "Get out while the getting out is good." So let's say if there's a sudden panic in the markets in a particular asset, and you can't get out, and you're put in position, you have a position on, and you're trying to close the position, and you can't get it filled. It doesn't matter what you apply. That's at the broker level. You have no control if the broker is going to allow you to get that filled to close out the position. So you don't have control over that. It all comes down to timing.
Yeah.
And the other problem is you can't control what goes on in the news. So there's going to be some elements you have no control over when you put on positions. But the idea here is to minimize that risk.
Well, you know what? I hate to say it, call me conservative, but I was never a fan of the breakout move.
Yeah.
I always waited for the markets to settle down for 15 minutes or so before I wanted to get in.
Right.
Anytime I've tried to do a breakout, I've paid for it. So, so that just hindsight, you know, I'm not getting any younger. I need to make sure that I'm, you know, being smart about, you know, the moves I'm making.
Right. But the question though is, are you making those decisions as a human?
I'm making those decisions based on numbers.
Okay.
I just know that the past number of trades that I've done in the Forex market, for example, I can almost tell you that what I think, it's almost a guessing game. It doesn't matter how good my analysis has been. Remember, there are no rules come the bell when it opens, and so I just wait for it to settle down, and then I'm not going to make as much money as a gambler would on a breakout.
Right.
But, you know, unless you got some access to information I don't, I normally won't play a breakout.
Well, I can tell you, we as retail traders won't have access, but to people that work in multi-million or multi-billion-dollar hedge funds and HFT shops, and they have access, but the little guy doesn't. Well, I mean, us little guys, we're really just fighting for the crumbs, in a realistic way to put it.
Somebody told me we're like the pilot fish on a great white.
Pretty well. Yeah, that's another good example. That's right.
Yeah, we just wait for, you know, the market makers to make the move, and we just piggyback off of their move.
Right, right. But again, if you want to trade like a professional trader and understand the relationships that we've talked about earlier, a lot of the professional human-based traders are going to trade the same way because they know those trading patterns. They know those trading relationships. Yeah. It just all comes down to timing, and that's where the technical analysis comes in and can assist there. So we've talked about the psychographic, but I know quant is the big one that everybody wants. My approach with quant is there's trading, and then there's risk analysis and risk management and analyzing what's going on in the markets before taking on a position. So what I'm saying, that's where quant comes in, is on the risk analysis. Because what you're doing is, if you're watching a set of data from, let's say, ETFs or whatever else, one of the nice things is when it comes to, dare I say, and I'm coming about now, machine learning, other techniques, you can use those to run simulations to figure out what the position weighting should be, what you should actually be trading as part of your portfolio, running simulations to be able to get, hopefully, maximum return when you deploy your capital. Make sense?
Yep.
And that's where quantitative analysis comes in. I'm not sure if you can really apply quantitative analysis overall on trading itself, unless you're trading at such a micro level on a, let's say, high frequency trading basis. Yes, machine learning and quant can help you. But overall, if you're taking on a position from a day trading perspective, or from a time horizon of a week, I'm not sure if quant can really help you out there. I could be wrong, but just my gut's telling me something different. But I do think quant is very useful in the risk analysis of things.
Something I downloaded about a week or two ago was in Python, how to create your own Google Spider.
Oh, yeah.
Something I was hoping to do at some point. I don't know how I'm going to figure this out, but I will. How to use some sites like Bloomberg and others where my tool is looking for trigger words, okay, that will impact an industry or sector or something. And it may not cause me to make a trade, but it'll help buffer what I'm thinking about it.
See, the danger there, though, is you have to be really questioning the sources of information. So let's say if you're just watching, you may only get access to, let's say, Twitter, right? There's a lot of fake Twitter accounts that will purposely send out fake news or fake tweets to throw off the algorithms that are doing that.
Yeah.
You have to be very careful where you get your sources from.
Well, I've got a list of very specific websites that I access.
Yep.
Okay, things like Market Watch. Not so sure about Yahoo Finance. I mean, as good as the website is, I still don't trust it being more of a social media type site.
Yeah.
I'm thinking more of the direct professional sites, like ETDB might be one.
Yeah.
Option. There's a couple of option sites I was looking at. Sector Spider might be another one.
Right.
Sites like that, not anything, not anything really social media centric.
Right. Right. Yeah, I just realized I didn't have my PDF show or your PDF showing. Sorry about that. So what we're talking about here is the first four elements that we've talked earlier: fundamental, technical, sentiment, and psychographic. So now we're talking about quantitative. I'm not sure if there's anything else in this PDF that we can really actually. Let me just go back to where we were here. Okay, so let me just get back to the first PDF because I don't want to spend too much time on this one. But these are just trading ideas.
Yeah.
I'm just trying to look for my PDF that we just had. Okay. So is it okay if we move on to the next PDF, Isaac?
Yep.
Okay. So you got here in the top left here, markets.
You might want to zoom in on that.
Yes. Sorry. Yeah.
Go to 150 maybe.
Yep. There you go. Cool.
That's better.
Okay, cool. So we got indices, treasuries, spot FX, currency, future, commodity options, and stocks. Now, that is all fine and good, but that's assuming you have, let's say, $100,000 trading account. So that will get you better access to data, better access to venues that enable you to trade these assets. So with most traders like myself, like a little guy, trading micro accounts, you're most likely going to only have access to maybe some indices, maybe some commodities, and some spot, and maybe obviously the treasury on a derivative of the actual spot market for that asset. So I like you're trading through Interactive Brokers.
Yeah, so I can do all of these.
Okay. So for me, I'm purposely starting small. Just I don't want to blow up an account and say bye-bye to any savings sort of thing. So I'm going to go micro. And what I'm planning to do is go retail with Duca's copy and put like $100 in there into the account. And I'm doing that on purpose to minimize my risk in case I have too many withdrawals and that sort of thing.
Now, just so you know, there are micro versions of things. Like, for example, crude oil. I'd never trade crude oil in and of itself. I probably trade the mini crude, like the QM.
Yeah.
On that. But even in currencies, for example, you can trade micros in currencies where you're only risking $20 a trade if you want to go down that low.
Yeah. That's me, because I just want to test the idea instead of just going full enchilada with that. But again, for most people that are starting out, they're going to be just mostly going with an FX broker, and Duca's Copy is a good broker. And then obviously going to focus on Forex itself, whatever the broker provides. Some do provide the treasury, the 2-year, 5 and 10-year. And you will get the precious metal, gold, silver. What else would you get in there? I think that's pretty well it. And oil. I'm sure there might be some agriculture in there, like corn in the Forex brokers. And then you'll get the stock indices as well. So that's what you're really traditionally going to have access to as a micro account. And then again, what you were saying, Isaac, for more universal type of assets, you do have access to the futures and options markets as well, and trading on a micro level. So that's good. Let me ask you, Isaac, where do you think the market opportunity will be out of these 5 or 6 asset classes? Where would you like to focus based upon your capital?
Well, I'm working on a basic IB account. So I am looking at the options side of it in futures, more or less.
Okay.
Not so much stock. I'm really I might do a mid cap, but I'm really not into. The problem with stocks is that like the leverage isn't good on it, and I'm tied up, and it would prevent me from being able to trade other assets.
Right.
With the account size that I have, so I'm more or less focused. I might do some spot forex, but I'm trying to stay within the forex options futures category, and then maybe some ETFs.
Okay, but you see more opportunity in the futures and options.
Yeah, because the way the S&P is going, I don't see a lot of confidence, like especially with the way things are right now with the U.S. Okay. I know that the markets right now have been great with Trump, but I'm starting to think that there's some clouds coming up. So
yeah. Oh, well, I don't know if you saw the posting from Ray Dalio the last few days. He says the next downturn, he calls it epic.
Well, I thought it was coming. Honestly, I thought it was going to come last October. It usually comes in October.
Yeah.
So I predicted that it would probably happen October, maybe November. When it didn't happen because of the election,
right?
So that totally caught me off guard.
Right, but who knew that was going to happen?
Yeah.
No.
So, but yeah, I mean, I've heard lots of things. I mean, the S&P is kind of wishful thinking compared to the GDP. Okay, the GDP is where the real market is, and when they're so out of sync with each other, that just tells me the speculation is just way too. It's just like the housing market.
Mm-hmm.
I want to talk about a bubble in Canada. That's what the S&P is to me. It's just like the housing market in Canada. So I look to the GDP in terms of where really things are, and I'd be nervous if I.
Yeah, I agree. Like if you look at what's happening in the markets right now, or in the Bloomberg news, it's exactly spot on what you just said. I mean, the nice thing about FX, a lot of it. I mean, the news events do drive the FX, but generally it's not like the FX is so big. It's 4 trillion. Is it 4 or 5 or 6 trillion a day? I mean, the FX is such a huge market, and that's just daily volume. And then the other thing is when it comes to options, it's a good market to be in when, let's say, a recession hits something.
Exactly.
You're not as impacted as if you're just trading ETF and stocks and stuff.
And you mentioned the Brazilian real. I mean, I was looking at the market on the peso, the Mexican peso, and there's still opportunity there too.
Oh, I know. Yeah. That's for the last few months with Trump. It's always been basically Trump tweets. Whatever Trump tweets, he says, "I'm going to build a wall." Peso gets killed.
Yeah. Buy that peso when he talks.
Yeah. Well, the problem with that though is when we don't know what Trump predicts. We can't predict Trump tweets, and whatever he tweets has an impact on something. And that's another reason for me to kind of not want to play in the U.S. markets.
Well, and that's where the macro comes in. You got to have an appreciation and understanding of the base level of things. If you got that, then what he does on one given day or another, it kind of shifts things a little bit. But if you got sound markets like the automobile industry, for example. I mean, I don't care what Trump says; people are still going to buy it.
Yeah. That leads us into the next topic about your indicators on the economic front, because this list that you provided is pretty well dead on again of all the potential indicators that you can use on a forward-looking basis.
The number scoring, that's the level of importance that I was told the Fed puts into those.
Oh, that's even better.
Yeah. So that's the score. So the top ones are the interest rate, non-farm payroll, etc.
Right. Yeah. Well, these ones right here are very important. The PMI, GDP, durable goods, that's actual product actually made. PPI is the price to produce. CCI is consumer confidence, which is another big driver because like how much is the market in the U.S. driven by consumers? 75, I think it's like 2/3, 75% of the market is driven by consumer confidence. Housing starts obviously is a big one. Capital capacity utilization.
I think they're off on a couple things. On the right-hand column, the ISM manufacturing, I mean, they've given it a 1. I think it deserves a higher score than that.
For sure. I think so. I will tell you that PMI is important. The ISM is very important. I mean, these are all important, but in terms of preference, yeah, you're right that the ISM should be much higher up there, because these are the exact indicators that professional traders use and only use on a forward-looking basis. They don't care what happened yesterday. They usually don't care about what happens today. Retail traders care about today, and that's why they lose money. But professional traders use these indicators that you're looking at right now to see what's going to happen in a month, and they trade based upon knowing most likely where the market will go based upon that data that gets released today. And that's what the professional traders use. You know, the indicators I've been following for the last 2-3 years have been dead on as a market direction. It's very rare that any of these indicators you can't use to figure out where the economy will go and what will impact what. This is a really good list. So again, I can provide the PDFs from Isaac on my website. I'll probably put an email on it.
There's a couple of great websites. One of them is a Forex Factory.
Yeah.
That gives it to you, and Finviz. Finviz is another one.
Yeah, I know. That's a very good one.
Forex Factory specifically for the calendars. The calendars, they'll color code them in terms of impact on that market of the day.
Right. I mean, you could just go to the St. Louis Fred. Here, let me go in my. I think we've talked about this numerous times. Nothing's really changed on my front. Just give me a second here while I load up my browser here. Just as a source for both Europe and you guys can see my browser, okay?
Yeah.
Okay, so if you go to Fred, let me just do a Google here. St. Louis Fred. They have lots of charts here, and lots and lots of indicators that you can use. But here's the warning. This is the warning. The Fed knows that a lot of institutions are using this data. So what they've been doing is been taking away data. And I've been watching this. I've been posting over the last few years. There's been important data that what the Fed has been doing is they repackage the data, and they repackage it so that some of the data goes all the way back to the 1930s. So you can see the historical economic events over the last 70, 80 years. The Fed knows that, and they know that the U.S. debt is so high and so excessive. So what they've done is they've changed some of these indicators and they renamed them. So now you can no longer compare that new data to the old data. And they purposely did this to screw up these data sets. And they're doing that because the Fed's panicking right now.
They really don't want to show their cards.
Well, it's call it conspiracy, but I could show you chart after chart after chart on how things are basically grinding down on a world economic level. A great example is if you were to look at the GDP debt ratio. Let me see if I can find it actually. Just as a classic example of where things don't look pretty. So if you look up U.S. Fed debt to is it GDP to debt? No, debt to GDP. It's been a while since I've done this. Yeah. There's a chart from the Fed that they used to have, but it just stops. Just suddenly stops up to a point. So you can see here they just stop at 2015. Why? Why did you? And look how far back it goes. 1970. Right. So why would they stop this data set?
I can tell you why.
What's that?
I can tell you why because of.
I know why. Go ahead.
Okay. Well, my interpretation of it. Now, I did my own a little analysis a while ago. I checked the national debt clock of both Canada and the U.S.
Yeah.
Canada, every adult, I guess, or every man, woman, and child, or something, they would have like if they were to divide the national debt up as something like $17,000 per person. Okay, U.S. 10 times that to $170,000 per person.
That's right, and there are 250 million as well. Don't
it isn't just the debt in and of itself. It's the policy of how they're letting in how the immigration is affecting or being disinfected.
Mm-hmm.
Okay, in Canada we've been pro refugee and we're allowing people across the border. We need immigration because Canadians are getting older generally.
Yeah.
U.S. they desperately need more immigration to pay for that balloon of the debt, and they're going the other way.
Well,
which makes absolutely no sense.
The general conspiracy theorists would say or otherwise, but this isn't conspiracy theory. When you look at the GDP overall, let me just give you another example. So let's say we want to look at the overall GDP of the U.S. Fed GDP. Okay. Just overall historically using the same data source. So we have GDP product and real GDP. So let's say I just follow real GDP. Okay. And I'm sure there's going to be another chart in there that they manipulate the data. So what they've done is they've had the GDP look awesome global. Historically, GDP has always been stronger, but I'm not sure if this is the right chart. Let me just think here. But they're I guess it's the other one. Hang on here. The interesting problem is when you historically look at the GDP overall, the percent GDP, it's grinding down. And it's historically, it's at a point where it's very high in the 60s. And I can't remember the data source, but if you watch it historically since the 40s, it's trending down. Overall GDP, real GDP of the U.S. market has been grinding down. So when you talk about immigration and all that, you can bring as many immigrants as you want, but if they're not as productive as they should be, like where they were in the 40s, in the 60s, that GDP, it's going to impact the GDP. And, if those, it's not against immigrants or anything, but it's very important that people understand that the immigrants that come in, they have to produce and they have to, that's what's going to drive the economy. You can bring in 100 million, a billion immigrants, all you want, but if they're not producing per capita of those immigrants, the overall effect is still going to bring down the GDP of that country.
There's one area of job growth that would need to happen that anybody could take advantage of that isn't being fulfilled, and you could talk to any business owner about this.
Yeah.
And that is there's an extreme shortage of skilled labor.
Yeah.
Okay. I'm talking plumbers, carpenters, electricians, that type of not the computer scientists, but
right.
the everyday kind of staple type of skill set.
Yeah.
That's where it needs to go, and anybody can go to a trade school and learn how to do that, and the government's willing to help pay for it if they really want it.
Right, but everyone wants to go into what they call STEM: science, technology, engineering,
exactly.
And that's where the money's at. People don't want to be paid 60, 70 grand; they want 150 grand. So that's where the jobs are in the STEM industries, I guess you could call it.
Yeah.
So the indicators, these are really good. Now data management, we're going to get our geek on here.
Now that's a different set of tools that I watched a video of another company that's what they use. But I'm really I'm kind of coming back to the idea of maybe just using what's in Ubuntu, like a Docker file and other the stuff associated with that.
Uh-huh.
It's a little simpler.
Sure. But I mean, we'll talk about what you got listed here. Then I guess you're interested in how I'm going to approach it.
Yeah.
Now I know you talked about your keyword spider tool, signal generation. We're doing that. That's very important. That's what we do every day. Remote running software. Okay, that's obviously SSHing or what they call tunneling into your server. Blah blah blah. That's standard. I'm going to leave Redis 4 for last.
Okay.
Comment, that's your own solutions?
No, that was from that. I think it was like not a Norwegian. I think it was a Swedish company or somebody. I think it might be from the Netherlands or something. That was their product.
Okay.
I've since dialed myself back because that's big money we're talking about with that.
Right, right. I'm going to talk a bunch of this. So post-trade logging. Let me just zoom in on this. Okay, so what we're talking here, post-trading logging, tracking P&L.
Your bottom imagery thing is blocking it. I don't know if you can move that out of the way or not.
Oh, I'm sorry. Does that help out?
And not really.
How about here?
Just like the bottom panel, it's got your little video there, the little camera.
Yeah, I just minimize this. Okay.
We just can't see the bottom of it. That's all.
Okay, let me.
You have to describe it or something, or move it to the far left.
Can you see it
now?
now?
Move it over there. Now I see it a little bit. Post trade something.
Okay, so I'm not sure what you guys see. I guess.
Yeah.
Okay.
We can see as far down as Skicket Learn. It's the machine learning thing.
Machine learning.
Bottom, below that, right there. Skicket, right there.
Oh, right here.
Just above that, where it says Skicket Learn.
Scikit. Okay. Yeah. Okay, so let's talk about post-trade logging. This is now technical stuff. So we'll take a couple of questions here in a minute. Tracking P&L. What's that word there? Reconciliation, trade log.
It's kind of like assessment.
Right. Yeah. There's like Kelly criterions used for that sort of stuff.
Yeah.
So that's just your winning trades versus your losing trades.
Mm-hmm.
There's a bunch of other techniques that I can't remember at this point, but I know Kelly criterion is really the classic one. But I'm sure there's other
for that, right?
What's that?
There's a formula for the Kelly criterion.
Yeah. I mean, let's not teach it here, but that's just one of the methodologies. That's probably the big one I'll use for now. So scikit learning and simulation binding. How do you mean?
I think that was part of the process of comment. I'm not sure about that.
Okay. Well, you say here controlling the graph. You're not referring to graph databases, are you?
No.
Okay. Well, let's talk about scikit learning. Okay, my approach to machine learning. About 2 weeks ago, I've been putting up a bunch of videos. I found some really great resources to learn about machine learning. I personally think machine learning is very good for the quantitative approach to analyze your risk, analyze your portfolio, and if you're going to be trading on a high-frequency trading level, yes, that's where machine learning is very useful. But I do think, I'm not sure if machine learning can be applied to everyday idea generation that we've been talking about using fundamental analysis and technical analysis. But I do know that there is a place for machine learning. That's just my view today. I mean, what's your view?
Well, I was hoping that I could actually assess where really how far back like a chart can go, whether it goes back 10 years, 20 years, whatever, as far back as 2000, for example, to see patterns of where you have your ceilings and your floors and ceilings in terms of support and resistance. Some people would call it your supply and demand levels, those types of things. Okay, and so because something that I've kind of stood by is the idea that a price has memory, and if you can predict where it'll stop, so if you have a certain a support line or resistance line that you expect price will stop right there, you can track the pattern of where whoever is buying supply, like from a company, what they're willing to pay for a product, for example. That to me is my idea of price having memory. Just basically the company buyers who go out and buy wholesale products, they have a level of what they're willing to pay for products, and that's what I see in that regard. But it's grouped, but you can almost see a sentiment from different industries to different industries what they're willing to pay for supply.
Okay,
that's what I was hoping to track with we call it psychic learning. Get it?
Yeah, I mean, it's like anything psychology. is tough when you have everything's based on a bunch of rules. You know what I'm saying? Because the word psychology, I'm not sure you can apply to a real rule-based type of decision-based processing. You know what I mean? Ryan had a question about noob understanding why automated trading works. All indicators are lagging indicators. Don't these automated trading miss moves that you would see as a human with trend line support and resistance? As I said, Ryan, we're not using those trading and technical indicators for trading ideas. Sounds like what you're wanting to use them as. We're using them as the time you're trading ideas. So generate your trading ideas first using these economic indicators that we talked about earlier here in the box above. And then here, and then use the technical analysis as a way to time those trading ideas, when to put on trading positions. So he meant, I know how hedges use automated trading. I think that's kind of outside the scope of tonight, Ryan. I think that's a totally different topic on how hedge funds do it. I mean, hedge funds do it using similar methodologies, but I don't think there's a specific set of rules that they use at all. I don't know, Isaac, if you have any opinion on how hedge funds apply general automated trading. I think that's kind of
well, they've been given not such good marketing these days because of who was it? Warren Buffett. He did a bet. This is going back where he predicted that some ETFs would do better than a lot of the hedge fund brokers did. I think he thought it was some ETFs that he invested in were going to reach like a multi-million-dollar plateau, and hedge funds weren't able to match it or something. And he was able to predict that years ago. So with hedge funds, I sort of look at hedge funds like I look at mutual funds. Okay? Mutual funds, by and large, 99% of them don't work.
Right.
Okay? Because of the not just the mechanism of how they're traded. Like you can't, in order for you to get into a mutual fund, you got to wait till like the end of the day or something to be able to put into it, and you got to go like a full day before you can see any results or something, which is total bogus if you're a trader, and just the management fees associated just didn't make sense.
Yeah, I mean, not only that, but when you say hedge funds, and let's just not only include hedge funds, but let's just say a retired guy or woman is about to, that has a high net worth, going to them for advice on where they can put their retirement savings. They hire these financial advisors, no different than a hedge fund. 80% of them cannot beat the S&P 500. And I bet you the same thing when it comes to hedge funds. They're not beating the markets or any of the major benchmarks in the markets. So that's where they go into things like market making, or they're not really trading. They're just going in ways to skim the market and find other ways to earn revenue outside of actual trading, because so many of them are actually failing at it. And same thing can be said for human financial advisors as well. And that's when you said as well, mutual funds as well. They're dying out because they're trying to find ways to find rationale when to charge these high hefty fees for market performance, but yet there's no market performance anymore. That's why the ETFs are doing better, because they're cheaper and they're getting a higher return based upon their performance. And it's the same thing with hedge funds. They're all dying out. And a lot of the HFT shops are now consolidating because there's so much competition and they're just not making money. And it's the same with what you're saying here. And that's why I think people are moving into algorithmic trading on an independent basis.
Well, something that took me a long time to figure out was that the professionals who sell the products, okay, like the banks, advisors at Sun Life or whoever, it's the same people who are trying to sell you your life insurance, for example, they don't know how to trade.
That's right.
They're just salespeople.
Right.
And, if you don't fundamentally know how to trade, stay away from my portfolio because as a rule, fund managers are not allowed to short. Okay, and I got a problem with that.
Right.
Okay, they're only allowed to move a portfolio over to a different sector or whatever that happens to be doing well or something.
Right.
I could be wrong about that, but I'm told that fund managers are not allowed to short because you're dealing with, in most cases, retirement funds, retirement accounts and stuff.
Yeah, that totally makes sense. And it's the same thing with these cloud trading solutions or these guys online that educate how to build trading. And I'm one of them. I'm going to admit it. But a lot of these guys don't trade. And the reason they don't trade is because they're most likely failed traders. So they find other ways to earn money, still being in the trading field, but they go into consulting or showing people how to build trading platforms and all that. And you want to watch the ones that are actually real traders. Those are the guys who you learn from.
Yeah.
You know, and that's a big misleading bill of goods out there. People buy into that these guys know how to trade. And the other thing is now a lot of them still won't put up their track record. Now, once I start trading, I don't care if I'm losing money or profiting. I still want to put up my my portfolio or my track record online, front and center on my website. And the reason I want to do that is for credibility. I think personally, if you're going to follow a trader that's losing consistently, those traders that are still there, that are consistently losing, they're the most determined type of traders. And those are the guys that I want to learn from. And I'm probably going to be at the beginning kind of like that, I think.
Yeah, I definitely would give somebody more credibility when they post all their wins and losses.
Yeah.
Because you know what, the more you lose and the more you stay with it, what's the old saying? You don't learn from your wins, you learn from your losses.
Right.
And if you can show your losses and what you did, if you're logging those trades and you say, okay, now I will admit here that there have been a couple, like I'm a very rules-based trader. I will admit that there were just as a learning curve, and I will put that out there. I did gamble on a couple of trades just because I missed a move and it pissed me off. So
right.
I wanted to get on it to see if it recovered, and sure enough, it didn't go my way, and so I knew when to get out. But at the same time, I lost money on it. But yeah, like as a result, there's certain lines that you won't cross once you've experienced certain things.
Right.
One rule can be that if you've lost 3 trades in a row or something, you take a break and you don't trade for 24 hours or something.
Right.
Things like that help to build your logic.
Not just that, but give you thicker skin staying in the market for longer term.
Yeah, but you're not doing things out of emotion. You're doing things based on your trade rules.
Right. Exactly. Ryan asked, he followed up. So what you're saying is that you're building your trading platform to help you automate trading new signals, exactly, and managing your trading history, right?
Yeah.
As a primary reason what you're trying to do is you're trying to develop systems that will help give you trading ideas, but you do it at such a scale that you're able to watch not like 5 assets, but maybe a couple of hundred. And you're building a set of rules around that. And when the opportunity comes around, that's when you investigate it and potentially put on positions based around that.
What I was hoping to do, getting the server and all, was being able to get access to much deeper data going back farther, so I have more data to work with.
Mm-hmm.
In terms of my algorithm machine learning, hopefully, if I ever get to that point.
Yeah, that's a good segue, because I purposely left the last 2 on this box here: Kafka, Protobuf, and Redis NoSQL. I don't know who are you an actual programmer? Would you say, Isaac, at all?
No, I'm not a programmer. I'm learning Python, and once upon a time I learned Fortran back in high school, but I'm not really a programmer.
Okay, well, you're showing your age there. You know that, right?
Yeah.
Okay, I'm going to keep this simple. You have Kafka, protobuf, which is basically a way to serialize data. So if you have data in memory and you want to serialize it, meaning you write it to a disk, that's what protobuf is. That's not an important factor at this point, but I will talk about the database because that's very important. Hang on, Ryan ask another question. I'll get to that in a minute. But the database is going to be critical, and especially moving into, we'll call it the machine learning world. Redis is very powerful. I think the industry is recognizing that as people are finding more multi-uses for it. But with Redis, which is true open source, meaning it's free, you get source code, it's much simpler of all the databases that I've seen. Now with the new version 4 that's come out or will be out, you've got the machine learning module that I mentioned earlier, and you also have this graph database. So I'm not going to get into that, but I'll just say this. You can use Redis for two big purposes. One, to store your data, and the other one is to be able to build message queues to send from, let's say, a trading script or an analytical script that you write in Python, and you communicate with the Redis instance, the database itself, and send messages back and forth with your Python analytical trading script through a message queue. So that's one of the big features that people use it for. And there's other newer instances that Redis is being used for, especially with the new features that come out with the version 4. And from my analysis from the I don't want to say years that I've been doing it, I still always think that Redis is a very powerful database and it just offers so much for you, but it's very lightweight. It's very fast. It's probably one of the fastest databases out there, and it's open source. It's free. It's simple. A lot of people use it. It's why I don't think I'll ever go back to any other platform of any kind. So I'm referring to things like big data platforms like Hadoop, and now this newer one, I should say, called Spark. These platforms are bloatware, and this kind of moves into what Ryan's asking. His question is, I'm a web developer. I'm just wondering, why do we need so intensive systems? So I'm gonna try to answer that in this way. When you use Redis, which is all about lightweight, you want to use a lightweight database that doesn't take as much data and resources to use and when it consumes data. Redis is small enough where it's embeddable into embeddable devices like, I don't know if you know the Strawberry Pi, the really tiny computers. You can put Redis into these things. You can put them into memory processors themselves. It's such a small footprint. And that's a nice thing about Redis. So then Ryan comes back with, why do we need intensive systems? So that comes back to the question of platforms like Hadoop and Spark, because they're bloatware. They're heavily like intensive processing systems that you build out, and you have to literally have data farms. It's crazy. I don't think you need to have that for your data, but when you start doing analysis and you're trying to do things like risk portfolio analysis, or you're trying to do other things like portfolio weighting and running simulations, you need to have that and those intensive systems to accommodate those simulations, and that's to find potential maximum return. And the other thing is, we haven't talked about our GPUs, graphical processing what do you call them? GPUs, graphical user. Help me out. Graphical
process users.
Graphical processing units, or I can't remember. From NVIDIA and Intel. It's because it's like you got a little mini computer on a board that can cost you as little as $500, and you can have literally 100 little processors that you could feed your data into and have it run simulations in such a rapid rate. And that's why you need intensive systems to run these simulations. And there's the smart architecting of the software, and there's the bad architecting. And I've seen the bad architecting, which results in just crazy software design, which I'm not going to get into. But if it's done right, and where you're going to do it is really in simulations. It's what it's meant for, like Monte Carlo and things like that. And that's where you want to use it for risk. And I want to put a mix of portfolio portfolio weightings on these set of trades for tomorrow. What's the best mix should I put in there when I deploy it, and what will give me potential maximum return? So you run simulations on that, and that's where Redis is really good for. But all these other platforms like Kafka, Spark, and Hadoop, they're big bloatware, and they're just marketing hype right now. And I've looked at them. I watched a video on it, and from the engineering point of view, it's just mind blowing on the complexity of these platforms. But as you were saying, Isaac, everything's simple, and Redis is simple, but you can get a lot of power out of it, and that's why I stay with Redis. So that's just my belief. Other people have different beliefs, but that's why I'm going to go with specifically Redis 4 of these new features that are coming out. But I think we covered a lot in this little box. Have I covered everything, do you think, Isaac?
Pretty much for what we're doing here, yeah.
Okay, let's move on to the next one.
Somebody had a question, I think.
Go. You have a question, or
somebody had a question, Ryan or somebody?
So I don't understand. Are you actually taking data from these graphs and run simulations, or are you hitting API or snapping sites to build trading signals from these news I'm scraping? Yeah, I kind of thought that. You're doing both. You're finding sources to for your data, store it into a database like Redis, and then do analysis on that data, and then potentially in the end run some form of a simulation. That's the ultimate goal. If that answers that question. So I guess we go into the actual technical stuff. Okay, so I like how you present this, Isaac. I'll just speak of my experience with the Swift and the chart. Can you see this part, Isaac, okay?
Very clearly, yes.
Okay, cool. Swift and Chart Director. I've looked at all these front-end tools and libraries and packages, specifically in Python. And if anything in the world, I love Python in many ways, but I think one of its biggest weaknesses is the front-end capabilities of Python. If you're using Matplotlib for just generating charts, Python's great for that. But if you're trying to actually build out some kind of interface that you're going to interact with, like a graphical user interface, I think Python's not the best way to do it. And then when you factor in the direction of the computing industry, where just about a month ago, there's now more Android devices than there are Windows devices, it shows you how mobile has grown versus desktop machines, let's say. So I'm really wanting to focus more on forward-moving technology, and that's where I'm wanting to focus more on mobile technology. So that brings us down to either really Apple or Android. So when you look at Apple, you get a lot of security with it. You get a lot of easy use, and Swift is getting very, very popular. And when you look at Android, I could tell you and show you story after story after story where there's so many like security breaches in Android. And when you're trading live money with it, it just scares me away from Android. So that's why I'm choosing Apple technology, even though it's more expensive, just more reliable and get the security with it. And I've talked to a lot of people about it. They believe the same way, that Apple's the way to go. Now, if you want to look at from a business perspective, Android versus Apple, I can show you more charts where, yes, Android's 80% of the market, but when you look at the user of both operating systems, both Android and let's say Apple iOS, you'll get more revenue, more monetization opportunity with an iOS user, 3 times more than an Android user. So just from a business perspective, you can also get more capital potential or more revenue from Apple iOS technologies or Mac OS technologies as well. So Mac is a good platform to go with, in my mind, and that's where.
So question. I got a question. The IB test client.
Mm-hmm.
That's the API, but so the IQ feed is the API for Mac. IB test client is the API for Linux.
Right.
Okay.
Yeah. The problem here now, this is where it gets tricky, is with IQ feed. Fantastic data source, really good, but I'm hoping that somewhere along the line that they get really good support for Mac. And I played around with an app that they have for IQ Feed, and it's not very good. Even their developer tech staff admit it's not that good. And I'm hoping that they can get it together. They may already have by now,
For
but
the IQ feed?
this is for IQ Feed, right? But
What are we talking about?
the IQ Feed client
IQ
for
feed
Mac
client.
OS. Yeah, for Mac
Right.
OS. But you ask about the IB Interactive Brokers Test Client, which is Java.
Yeah.
It's not that right. Everything really comes down to you want to use the data from your broker. So I believe the Java Test Client's the right way to go because that can be run on any OS because it's Java, right?
Okay, yeah, because it can run on Mac too, could it not?
Yes, it can. And I've run it on Mac, and I've run it in my IDE for Mac, the NetBeans, and it runs fine. So that's not a problem with the interactive brokers. I also can confirm if you want to go with something like Duca's copy for Forex data and Forex execution, because it's J4X, which is Java based, you can also use Duca's copy with the same principles that you would use for interactive brokers as well.
Okay.
So you're covered there for both if you're going to use either Duca's copy or interactive brokers. When you want to dig deeper for better data sources, there's two options you have. IQ Feed, still questionable, but if they want to stay in business from a competitive standpoint, they got to get the IQ Feed client rock solid for the Mac OS. Because guess what? Majority of the market from developers are moving to Mac. And if they don't get that right, they're going to lose that. And more competitors are going to come in and take away those business opportunities for them. So hopefully, and I know they're getting there. I just don't know where it's at right now. Does that make sense?
Yeah.
Okay, so trade logic, you were saying about order management execution. How do you mean, like?
I thought that was like it's like it's almost attached to your like I couldn't really distinguish between this and the commands that are already in Trade Workstation, like just putting it through a trade. Like does this somehow get in between your API and the actual platform?
No, what happens is with interactive brokers, you get your API. The difficulty is what programming language you want to use to interface with interactive brokers. Now, there's two components that I think you're speaking of. You have your execution, and then you have your data.
Yes.
Does that make sense?
Yeah.
But you're usually going to use the same API. Now, it's changing now where interactive brokers traditionally supported three major languages. They support C++, they support C# and Java. Those were the official languages that interactive brokers supported through their API. Make sense?
Mm-hmm.
So now they just added Python, an official API support. I'm part of the Interactive Brokers news group. And for anybody who has Interactive Brokers, join them through just Google it, you'll find it. But they're still struggling with the Python interface. Now, you mentioned the Interactive Brokers Java test client. That's still the best way to interface with Interactive Brokers. Nice thing is with some of the stuff that I've got developed, if you use Java, you're good to go. And what you do is you take that data, you take that execution or data that you're using, and you're going to interface that through Redis. That's why I stress Redis, because here in Redis, what you're doing is you're using Redis for two purposes right here. You're using it for both a database, a repository or data hub for your data, but you're also using Redis for your message queuing. Got it?
Yep.
So what you do, no matter what language you use, specifically, let's say Python, you got your Python analytical scripts, they generate a signal. Question is, how do you get that signal back to interactive brokers? You could traditionally use it through you can do it through the Python interface. And you always hear, oh, Python's slow, blah, blah, blah. And that might be true. If you want the convenience, I think over time, that may be the smarter way to go. But if you want my opinion, the more rock solid way to do it is to push your trading signal back into Redis somehow, have it generate the signal, and then have another listener at the other end of, let's say, a particular message queue, listening for those trading signals and execute the trades that will be interfaced back through your interactive broker's Java test client. Make sense?
So what would you use as a listener?
Well, that you're using your Java test client for that. So you're going to have two queues. You're going to have your outbound queue for the data into your Redis server instance. So far with me?
So you have an outbound queue for data through Redis.
Yes, that connects into Redis as a message queue.
Okay.
Then you have an inbound message queue built into your interactive broker's test client that's listening for those signals. Once those signals come in from Redis, then you can execute those orders from those signals being pushed out from Redis.
And that would be, okay, so
the
IB test client would be the one listening to the signals.
You're going to have two message queues with your Java test client. You're going to have one that's for data. You're going to have another one for execution, and that execution on that message queue is going to be from the signals that are generated through Redis.
From signals through Redis.
You got that? Let me try out this annotation tool here. Hang on here. Let me pull up a blank note here.
So the IB test client's actually listening for the queues.
Yeah, let me just see if I can bring up hang on here. I'm just trying to bring up a way to annotate this. Okay. Okay. So just give me a second here. I'm going to bring up a new blank screen. Okay. You see my blank note here? Okay, so I'm going to bring up my annotation here. Just give me a second here. So what we're going to have here is we're going to have, I'll just put a J here. Okay. That's the Java test client. So that's the interactive brokers test client. So this is your gateway into interactive brokers. Let me just make that. If you can make sense of this annotation. So that's, we're using Java here to interface with interactive brokers, correct?
Yep.
Okay, so over here, I'll call this Redis. Okay. So this is where we have our databases. And we can have as many of these as we want. It's open source. We're not limited on our queues. We could have a cluster. We could have millions of these. And what we're going to do is we're going to have two message queues. Okay?
Mm-hmm.
So we're going to have one message queue. So we're going to have interactive brokers. Okay? Data will come into the Java test client, correct?
Yep.
And that data then gets indirectly pushed back into Redis. That's market data we're talking about right here. Okay?
Yep.
Got it?
Yep.
So on the other side of that, we're going to have a bunch of Python scripts. This is just simple architecting of how I'm going to do it. Okay?
Okay.
So these are our Python scripts. So we can have as many Python scripts as we want, 100, 10, and each Python script is going to have a different need. Let's say we want a Python script that will just watch the S&P 500. Okay? So just as an example. So what will happen is that Python script is now going to go into Redis and request data for, let's say, S&P 500. You with me on so far?
Okay, request data, yeah.
Yeah. So this Python script is now going to make calls to Redis. With me so far?
Yep.
And in Python, it's going to make requests to market data from the Redis instance, the Redis cluster of data that we have. And that's being pushed in from the Java test client. Follow me?
Yep.
Okay. So each Python script will do its analysis and look for trading signals and blah, blah, blah. And it gets one, correct?
Yep.
So then that same Python script is now going to send out we'll just call it an order. Okay, or better yet, we'll just call it a signal, an SIG. Okay? A market signal, or we could have the Python script not just generate a signal, but how about an actual order? Okay. So it could be either, it just depends upon how you want to architect it. So we could have just purely an order or a signal within that individual Python analytical script. You with me so far?
Yes.
So then it pushes back that order back into Redis. Correct?
Mm-hmm.
So here in our same interactive brokers test client, we can set up another thread or another process that will listen for market orders or market signals. Once it finds a market order, then it will send out an order back to IB. That's it.
Okay, yeah.
You got it?
Yep.
So right here.
And the order would go through, not the test client, but something else, right?
Yeah, we could set up another listener right here, and it could be C++ for all we know. Or it could be C, whatever we want. And that little guy can interact with IB in its own way. It could be done through the gateway. It could be done through a fix protocol. It could be through numerous ways. So there's three steps we got to worry about here. We have to worry about market data being pushed into Redis.
Yep.
And then we have a Python script, for instance. It could be anything we want, written in whatever language. In my case, I'm going to keep it simple, do it in Python, does its analysis, sends back that order signal, right? Back into Redis. I could use the same Java test client. I could use a completely independent one just purely for orders, or I could just make it C++ for all I know, and then send that order back out to interactive brokers or another broker if I want. And maybe Duca's copy or somebody else.
Nice.
See how I do it?
Yeah.
So it's all driven through Redis and these message queues. That's how Redis works. Let me ask if anybody got any questions on that. If not, I'll.
So the deal is to use these different programs to write scripts.
Yeah. Well, hang on. Yeah, like the definition from a software perspective is Python are scripts, C++ and Java are programs.
Right.
That's just the basic distinction, but they're all literally programs.
Yeah.
So far, so good?
Yep.
Okay, cool.
Some will have limitations that others won't, though, I would assume, right?
What's that?
Some, like Java, has different advantages and disadvantages from C++ and C.
Right. Yeah. I mean, that's a whole nother presentation.
Right.
Right. But that's basically how I'm going to architect it. Okay. And I've been following that for quite a while. And that seems to me the most logical because that's where Redis is very powerful as the data hub for all that stuff. So basically what we covered here is the TWS, the trader workstation for both the data and the execution. Now, when you mention here the IPython notebook, that's for your trading ideas. And again, those get embedded into those Python scripts that we talked about. Now, interesting you mentioned here local Python 3 client, which I'm going to start moving into from Python 2. So you're looking at primary interface for data management, signal generation, which we already talked about, Python coding, research core, data research, and data labs. Again, you can put all those trading ideas using Python, no problem. Python script generates specifically CSV files, comma, separated value files, or charts PNGs. And again, that's where you put all that logic into those Python scripts.
Yeah.
Cool?
Yeah.
And then you mentioned some of the Python packages you want to use, Python data, CPython DS, CPython universe, CPython volatility. So obviously these are specific packages for your own need. And then you have some here for Python 3 package data set. These are the popular standard ones. Pandas, yes. NumPy, yes. And Matplotlib for the visualization. Right. So we got all that covered, right?
Uh-huh.
Okay. So let's get into the real back end stuff as you mentioned here. Fast flow or new plot. This is for multi-threading. I don't want to get into too deep into that because that can get pretty hairy. And I will say this about FastFlow, which is an open source multi-threaded library. It doesn't work. I haven't not yet able to build it on Mac, and that's a big turnoff. But the one, if I go down this path, the one I'm looking at is Intel TBB, threading building blocks.
Okay.
And then just let me know if I'm going too fast here. But then you
What's
mentioned,
the new plot?
oh, the new plot. Yeah, the new plot, this GNU plot, that is think of it as another way of using Matplotlib. That's just a visualization tool that you can use that's
Okay.
free, open source to generate charts. And of all the things that I've seen outside of Chart Director for C++, new plot's amazing to use to have C or C++ generate trading plots with. And it's open source as well, which is nice.
Okay.
Okay, so the CodeLight, you're using this as your potential integrated development environment. And again, because why I want to stay with Apple, I don't know, I'm not sure if you've seen some of my Apple Tech videos on Xcode. I'm finding Xcode's quite good for Apple for development. If you're going to use Apple as your front end for development, then just push those C++ files onto your Linux if that's where you want them to reside, or if you want to stay native to Mac OS. You have that flexibility if you use GCC as your compiler. So far, so good?
So I use new plot to create the C++ files.
You can. It's an option. It's an option.
And Xcode to generate the C++ files for Linux.
Yeah, you can do that. That's your IDE that you're going to use. That's what I will use.
Okay.
Right? Xcode, that's the free one from Apple, but it's on the same level as Visual Studio from Microsoft.
Okay.
Like we're getting pretty deep here, pretty far advanced. But if you're asking me on my languages that I prefer to use, I would prefer to use Python for all of my research, all of my analytical scripts in Python. And the only part outside of that I want to use is for either execution, like for orders, or for the simulations that we talked about for optimizing your portfolio or your position weighting, that sort of thing. That's where I want to use that C++. But I do know, and I'll say this, that I do like the Java test client that we talked about from Interactive Brokers as a nice way to interface with Interactive Brokers. It's like a scaled down version of TWS, the Trader Workstation, but you're getting the source code with it, and you have different ways to interface with it through, let's say, Redis or something else. Make sense?
Yep.
Okay. If I get too geeky for you, let me know. And anyone else there that's following, let me know. I think we just lost somebody else. So we've talked about CodeLight, FastFlow, NuPlot, NumPy, Boost, Python. Again, I think we don't need to go to that level because that's pretty advanced. We've talked about Java, JSON. You mentioned your C sharp.
Yep.
I'm not. You want to use .NET and Windows to add on the complexity?
Nope.
Okay, moving on. We've already talked enough about Redis, Mongo. I'm going to tell you the thing with Mongo. I'm going to be honest. At one point a few years ago, I would have suggested Mongo, but if you want the in-memory functionality that you get with Redis, which is free because it's open source, to get the equivalent with MongoDB, a lot of people don't know this. MongoDB operates on a freemium model, meaning it's commercial. So you got to pay for certain functionality. So if you want the in-memory database functionality you get with Redis, it's going to cost you $10,000 of MongoDB. So that right there throws out Mongo. I just got a question here. Hang on. Ryan, who's this? I personally hate Mongo for production. He used it at my workplace, or I've used it at my workplace. It works okay, but I prefer Redis. It's a lot more flexible. It's just a lot more advanced. Thanks for pointing that out, Ryan. Okay, going back here. Okay, so we've got Redis, MongoDB, Fixate. I'm going to be honest with you, Isaac. I don't want to even think about Fix because Fix is such a difficult protocol.
Okay.
That would be if I had a large account, trading account of like 250,000, 500,000, I may address Fix. But until you get to that level, I wouldn't even worry about Fix at all. Now, you've talked about two the two platforms here, the Linux distributions.
Yeah.
I like Ubuntu only because I know Ubuntu. It's easy. Linux, Mint, I know is more popular. I mentioned that, and I'm not here to confuse people about it. But I'm gonna I'm not. I don't want to confuse you any further. But take a look at Debian as another option as well.
What? Sorry.
Debian.
Debian. Debian.
Yeah, yeah. Let me go to the distro watch because I know that's where this came from. Hang on here. Let me just set this up. Give me a second here while I go back and share my browser. Can you see my browser okay?
Yeah.
Okay. So if I do distrowatch.com. Now, this was weird because I just did this today. I made a video. I think we talked about it last week. When you look at the distribution popularity here of rankings, you got Mint, Debian, Manjaro, and now Ubuntu. I don't know what a Manjaro is, but I bet you this list goes up and down like a toilet seat. Mint I've played with, it's okay. Ubuntu I like, but the problem is people are dropping it because there's certain features that were added about a year or two ago, and that's why popularity of it's falling. OpenSUSE I wouldn't even look at, but from a technical point of view, if you're okay with Linux, take a look at Debian, and I'll tell you why. I did a video on this earlier, but if you go to Debian, the distribution website, okay, Debian is the predecessor to Ubuntu, but for some reason, Debian has come about trying. I don't know if you want to call it competing with, but just there's more contribution from developers going into Debian than Ubuntu now. It's pretty evident on this distro watch ranking. But this is pure Linux. If you choose to use this version, you have to be careful because you may run into some technical glitches because it's really meant for give me a second. I got to plug in my laptop before we lose power here. Just give me a second here. I think I got it down to 18%. There we go. Okay, so with Mint, Debian, it's a more of a purist type of Linux, but it's a lot more lightweight than Ubuntu. But if you're new, I would just stick with Ubuntu. It's a much easier distribution to use. What you really want to make sure is just to make sure your package manager with Linux. I'm not an expert in Linux by any means, but you're always going to be using apt-get as your best friend. And that's going to enable you to install all of your packages in Ubuntu or Debian. And for instance, if you want to install, Linux, you just go apt-get install Python as an example, right? And let me just see here as an example, because I'm going to be going through this at some point in the next few days. So when it comes to installing, let's say, Python in Ubuntu or any Linux, there's different ways you can either build it from source, Python, or you can basically run these commands in your Linux terminal that will get you set up so you can run the get in that not only Python but all the base essential development tools tool sets that you need to get C++ and Python installed. Okay. This is getting really geeky here, but just as pointers. That helps you out, Isaac, I'm not sure.
Yeah. Mm-hmm.
Okay. Sorry to go down that path, but if you're starting out, I'll just stick with Ubuntu. We're not here to build our trading environment. We're just here to learn, test it, and then once we get something that we're happy with, then get what you want developed, and then build a new environment using the proper operating system you want, or whatever Linux distribution you choose. If you want my opinion, coming back to the distro watch, out of this list, you got, like, let's say we're talking now a trading system for production, for live trading. I would use maybe Debian as an actual distribution choice. But if you want to include really high frequency trading level and lowest latency and the less processes, there is something called FreeBSD that I've not talked a whole lot about. Now, this is something I'm only saying as your end target operating system option. This is a Unix. This is not Linux. So when you start moving to FreeBSD, you're now moving into a very low-level operating system where it's very minimalistic, gives you a few amount of packages. It's literally bare bones, or what they call bare metal. And you're essentially going to be building everything from source outside of maybe the Python interpreter, maybe the C compiler. Everything else you're building from source. So you got to know your stuff if you're going to use this FreeBSD. But at the end of the day, this is what I'm going to use as my end operating system for my live trading environment. But you got to be.
I'm not comfortable in this level, so I think I'll probably stick with Ubuntu.
Right, but I'm just saying, as you get more comfortable, give it a year, let's say, in Linux development with both C++ and Python, you could start using this and looking at this FreeBSD as an option.
Sure.
Okay. All right, so I think we covered this. So I think we're coming to our last PDF, and it's only been 2 hours. So let me just make sure. Yeah, I think this is our last PDF here. Am I right that this is our last PDF, Isaac?
Is that the one that's got the comment information on it? Is this a little table?
Oh, I'm sorry. You got to see this, don't you? Just give me a second. Yeah. I'm sorry. I got to share the PDFs here. Just give me a second. I forgot to do that. My apologies. Here we go. Can you see it now?
Yes, that's the one. I do this all the time when I'm training salespeople.
Okay, I think we'll be able to get through this pretty fast. Okay, you mentioned the keyword crawler.
Yeah.
Already. We've already talked pretty good in depth about geopolitical and government data. We've talked about a little bit about the event triggers, but a lot of this, what you've got listed here, is it's unpredictable. I mean, dividends, we know that they got a calendar on that.
Yeah, but you know dates. Dates are important.
Yes. Yes, they are. Let me just zoom in on it if you can't read this properly.
Like on an options trade, for example, I get the hell out of Dodge just before like a dividend payment announcement or something.
Right, but in the long run, you're not going to be trading stocks anyways. So
right, but I was talking purely on an option-to-option basis.
Right. So I would agree with your seasonality on expiration on your futures and options. I think obviously there's a lot of predictability on that, but where it gets unpredictable is when you start getting weather news that can impact agriculture. But you want my honest opinion when it comes to agriculture, the moves are pretty small. And I don't know if I'll be trading a lot of agriculture.
Well, there's a few staples I was thinking, like corn, wheat.
I'm pretty sure you've never seen this one before. Let me just get the browser here. I want you to see something, and hopefully this will open your eyes here. So back in the browser here, if you go, let's say, to Google overall, and you look at futures contract volume, there's a good website for this. bar chart. So
Yeah, I've been there.
you've seen this?
Yeah.
Okay, so you're able to judge what the top the top futures contracts you want to be in. Obviously, I just can't remember where it's at by volume.
Just go
But I
to
do
full list. That's a little bit easier.
full list. Where am I? Yeah, I'm looking.
It'll pop up.
Yeah. Okay. Here we go. So yeah, we know about the E-minis for S&P 500. Obviously, I'm really surprised that these commodities are up there by volume. Or can I?
Yeah, these are the standard ones I'm talking about.
Yeah. Yeah. No. Let me pull up the by volume. Is this working? Here we go. I think this is by volume. Is it? Looks like it is. No, it's not. Yeah, it actually, this is weird because by volume, S&P 5, I've never seen this before where it looks like it's correct. Cotton, sugar, cocoa
Yeah.
are up there. Wow. I've never
I'm
seen that
saying.
before. Yeah, that's a first for me.
This is what happens when you listen to macro what do you call it? Macro announcements and things.
Yeah.
They go right into the markets, like the SSI market, or the ISM market. That was the one that was for the metals would be a part of that.
Right.
Okay, it's more industrial, right?
But I'm never seeing agriculture this much volume. That's crazy.
Well, commodities, the commodities are the base of everything. Because
No, I know that's for industrial, but we're talking agriculture.
yeah, I know.
But that's impressive. But I guess that just shows you how desperate things are. Where, the cotton, sugar, cocoa, live cattle is up there in terms of for the futures market.
What do all these have in common?
I think it just shows you there's no yields that are moving into these future contracts.
They're all staples.
True. Yeah, exactly. I did an analysis on that where I did an analysis. If you were to just focus purely on stocks, how there's a cyclicals versus defensives. And you look at the top 10 over the last month, top 5 were all defensives, utilities, healthcare. And it's the same thing here, where these are all purely defensive future contracts.
Mm-hmm.
Yeah, absolutely. This is recessionary proof. So this is a good indicator of how they see the markets. This is the pro traders are seeing this.
Yep.
This is where they see the yield. Yeah.
I can tell you a stock like GE is up just based on this type of stuff.
Yeah, that's a defensive for sure. Definitely. Anything military, especially under Trump, will do not well, but it'll be one of the better performing ones. And same with the old school commodities like agriculture. Very interesting. Nice note here. I'm glad we discovered this. Thanks for that.
The volume, if you check that column on the far right, the volume, those numbers, what is that in reference to?
I think those are contracts that are being issued from traders.
That's what I thought, because normally those should be into the millions.
Well, total number of contracts traded for the day.
Yeah.
That says something right there. Because again, futures and options are a great place for forward looking. And if you're seeing this with the futures market, this is where they see things maybe 3-6 months out where the yield will be in these future contracts. Very interesting. Cotton, sugar, cocoa, live cattle. Interesting.
Can you go to Sector Spider for a second?
Hang on here. I just want to mention, because I'm not sure if Shalom's still aboard, but we talked about this VIX. So they're seeing some spikes coming with the VIX. Very interesting. So you wanted me to go where?
Sectorspider.com. By the way, a little birdie told me to stay away from the VIX.
I agree.
Yeah.
I think I was just listening to Bluebird. You said Sector?
Spider. Sector SCTR. Or hold on. No, Sector and then SPDR, I think.
Okay. Let's go back to that for a minute. Because Sector SPD.
There's a D before the R, yeah.
Okay. Let's just go back to this VIX, because I'm not sure if no, he's no longer. But just looking at this right here. The S&P VIX, that's shortening it looks like.
They're shorting it.
Yeah. Okay, so here we are. The spiders.
Look at the top.
Yeah.
Look where the S&P is. Look where the discretionary, and look at where the staples are. Scroll down a little bit.
Yeah. Right. Energy up. I'm really material. Interesting. I thought for sure real estate would be up. I'm surprised that healthcare's financials, energy. I don't know about energy because the reports that I'm seeing, they're saying that oil's going to be down for a long time.
Well, what are the other energies? It's not just oil.
Mm-hmm. True.
So there's natural gas.
Yeah, I should say natural gas will come about. But in terms of maximum opportunity, I think out of that lot, I'd say maybe materials, but that's cyclical still, isn't it?
I would say no. Base materials it's everything from heavy industry to like a lot of that is from like Caterpillar, things like that.
Right. That just depends upon like emerging markets because they were saying emerging markets were coming back, but it's tapering off now as well. Like it just everything seems to be going into an overall downward grind.
But the key here, I think, is this consumer discretionary.
Yeah, totally. The consumer's getting hurt. Totally.
Well, they're scared. That's people are holding on to their pennies.
That's right. They don't see a good future. I always thought real estate would be a good one.
Well, real estate's one of these things that's like it's always going to be there on some level. So you got to kind of take it.
When the market turns, it's always utilities are the best performing, and they're not the best performing. They're the only ones that are just having the best performance, but usually everything else is tanking.
Yes.
Yeah, interesting. But this bar chart one on the future contract volumes, wow, that's quite remarkable. Yeah.
So I had a few of these. So once upon a time, I put together this watch list of some of the basic, like non-threatening, like non-total crazy volatility type things to get into.
Right.
Like I was going to stay away from crude oil and silver, for example. Those are like the two worst.
Right.
Okay, but these ones you see on the chart here, these are kind of like the more beginner type of things to invest in.
Yeah, that will give you some kind of return. It's evident. I mean, based upon the volume. I've never seen this before. It's usually oil, gold, but no, it's all agriculture related. That's quite interesting. Remember, do you know Jim Rogers?
Yes, I listened to an interview about a month ago from him.
Yeah, he's been always calling agriculture since '08, and it's always been one of the worst ones to get into. But he's now proving to be right here in these future contract volume levels. Yeah. Definitely. There's no doubt on that.
There's a great website to listen to macroeconomics called Macro Voices.
Okay.
Listen to some of those interviews. Those are some like the top people in their industries, and like these are like experts in, they're how can I put it? Like they're economic economists and theorists, but they have trading background, which is important. They're not just stiffs. Like these guys know what they're talking about.
Yeah. Well, it comes back to what we talked about. You always want to listen to traders, not consultants or educators. Really cool. Okay, I'm gonna go back to the PDF. Okay.
Yep.
All right. So just give me a second here. Let me get that set up. This is a real pain, I'll tell you. What do we want? We want your Acrobat Reader. Okay, so we've talked about seasonality. I think we did. Agriculture, there's no doubt on that with what we just seen. Macro industry, I think we talked about that throughout the night with that China iron ore hoarding business on the supply side.
Few caveats on this next one. Specific websites, none of the social media nonsense.
Yeah, yeah. Well, actually, the Bloomberg and other sources, I think Bloomberg's still going to be your best bet. That's what a lot of the pro traders use. And I'll be saying that till the day I die, I think. Sidekick learn machine further interprets into filtered, granularized, filter to through Python interpreted data, initialize. Okay, vetted for trading. Trading pipeline, vetted data further for filter info before manual trading or automatic trading occurs. Alert trigger, mute manual scrutiny, and a message to sell. Okay, I see what you're saying. Well, so this is coming back to that mobile app we talked about.
Yeah.
iOS. Okay. Alert notification needs scrutiny, further decision making, automatic trade triggers, watch list, automatic number of price triggers. I think we've covered that throughout the night.
Probably.
Yeah, I think that's it, eh?
Yeah.
Okay. Yeah, I think it is.
So this is just me thinking out loud and watching videos and taking
yeah.
incredible, like just the time I've spent into taking notes on some of these things.
Yeah, yeah.
This is me just kind of spilling it out onto something that kind of makes sense to me.
Yeah.
But I'm going to further refine this based on just what we discussed here tonight, and also some of the other things I've been reading.
Yeah. Well, I mean, a lot of it, I'm in parallel. I concur with you about maybe 80%. Some of the stuff here that we've already kind of glossed over is probably something I wouldn't. I mean, we've already talked about it.
Yeah, well, it's me not really understanding exactly how the mechanisms work with some of these applications. And
yeah, I mean, there's going to be a lot of self-learning there, no doubt.
Yeah.
But hopefully I can help wherever along the line.
So the next step for me is to get try to get my server set up and have it talk to my Mac, I guess.
Mm-hmm.
Now my Mac is something that I'll take to work with me, and I want to be able to sort of access it remotely.
Right.
So
I'm not sure on the setting up of it. I mean, I don't know the exact technologies you could use. You could use SSH, tunneling, probably some form of a remote desktop.
Mm-hmm.
I mean, what you could do is if you follow that methodology, I was thinking with the not OpenStack, but the other one, the Zen server.
Okay.
As if you set up some kind of maybe a Linux environment that you can have a remote desktop capability that you can remote into.
Like when you say the Linux environment, are you talking about the Ubuntu?
Yeah, Ubuntu or whatever distribution you choose, and just set up a process like a capability where you can remote desktop into it. But the catch is just understand that you should treat this server, if you're going to have it talk to the outside world. I mean, are you going to have it just connect in within like your own environment, like your own secured,
Well, when I bought it on Saturday, one of the guys there told me that I should be looking into this a security system. It's called, what the hell is it called? I got it written down somewhere.
Okay.
Patterski or something. Patterski. It's kind of like it's got a virtual firewall built in the system.
Okay.
And it costs like $25. I think $25 a year to be like to get access to it. And then
is it Linux based or is it Windows based?
You know what? I didn't ask that. I imagine they've got both.
Okay.
All right. So I mean, it's something I'm gonna look into when I get a chance to go to the website.
Yeah.
And I'll let you know if it's got Linux as well.
Well, let me just check it out. Here, just give me a sec. I'll load up the browser. Let's do a search on that. So what you'd be looking for, let's say a Linux-based open source remote desktop server that you can log into. XRDP is one. I've never really set that up. Let me check this one.
What'd you call it? A Linux-based what?
Linux remote desktop server.
Remote, yeah.
Uh,
I also got this other CPU I was going to connect as an extra node.
right.
Backup or something.
Mm-hmm. There's X Windows, which is a graphical. I've got here Tiger VNC. I mean, if you Google it, you could probably find some decent stuff with some opinions. But that's
I got to do a little bit more research into that.
yeah. I mean, that's what I'm saying about from the security end of it. As long as if you want to do it this way, you may want to just use the server just to play with, nothing sensitive on it at the beginning. And then as your knowledge in the technology advances, then you could probably look for more secure solutions. You know what I'm saying?
Yep.
Just to get you started and not worry about, what's on the server and having the thing get hacked. But I knew one of the more popular ones might be this XRDP or X Windows itself. So, I mean, there's different options. Because I was going to ask, is there any other questions you may have outside of these PDFs?
Not me. I just got to figure out. I might need to get some help from somebody to help me set up the server because I don't know how to access it. I've got stuff I've saved on drives, but I've got a monitor hooked up to it, but it's not pulling it up.
Right. So. I'm not sure if I think Ron's the third person we got left after we blabbed for a while. Everyone else dropped off. If you got a question, Ron, that we didn't cover tonight. I guess it's more focusing on and researching, as you say. So next week, I'm probably just going to focus more on the trading side of things.
Okay.
Tonight was just doing exactly what you wanted to go through, was the architecture of basically your technology stack.
Mm-hmm.
So I thought I'd share my thoughts, and I think we're in line with each other in terms of ideas and what we're going to implement. We're pretty similar.
Yeah.
So I'll start my end pretty soon, probably the next few days.
I'll do a little bit of work here. I'll show what I come up with, and hopefully it'll be a pathway for others to kind of mimic if they want to.
Yeah.
Do this.
Because I'm in the same boat as you. I do want to get my own server. But let me just put this out there. Are you familiar with Redis Labs?
No, not really.
Well, let's say you set up Redis, okay? And your environment, Redis outgrows your environment, okay? Which is probably most likely going to happen. Redis Lab is a cloud solution that you can set up Redis installations and have it run remotely on their cloud solution. Here's the problem. The data storage is small. So you only get 1 gig, and I mean, it's fairly cheap, but 1 gig's not going to get you very far.
No.
You're going to have to get into the couple hundreds. I mean, if you want to get into a 5 gig, you're looking at a $400 or $500 price range per month, and even 5 gig is not very much.
No.
You know what I mean?
Yep.
So worst comes to worst, you could use these guys as an option, but you won't get far. And that's why if you're doing simulations and stuff, you could use, your own hardware in the direction you're going with. I think we got a question from Ron. Okay, no. So I think you're on a good start, but I think the idea here is with the server you got, I probably, if I were you, I'd probably set up a virtualized environment because that's what the server is really primarily geared towards.
Yep.
The one video I sent you pretty well explained that it has a set of processor units with the hypervisor built in, which is really built for virtualization. So it tells me that the server is really geared towards that. So if you install, as I said, and this is for other people, the Zen server, as I hinted towards you, it's open source. So you're like, are you familiar with VMware?
I've heard of it. Yes.
There's VMware ESX server, which is geared for a commercial solution, but this is the open source solution. It might not be 100% all awesome. Like, the typical open source versus commercial quality of software debate.
Yep.
But it will get you started. And I think I sent you some videos on it as well.
Yep.
Yeah. So what I do is I probably set up a virtualized environment with probably a Linux distribution that you're comfortable with, maybe like Ubuntu.
Yep.
And then once you outgrow that, probably you will, you could either put that as part of a cluster of hardware and then build out a more sophisticated system down the line. You know what I'm saying?
Yeah.
And just use this as for the next 6 months to play around with until you get something built with, with the proper scripts and other technology that you want to build out.
Okay.
But to use as a production server, I mean, if you're starting small, I'm sure it'll be fine. Mm-hmm. But I think once you start moving into really sophisticated stuff by, let's say, you want to have a server that has like 100 and something gig on it. Yeah, you might have to get yourself a little more sophisticated hardware. But for starting out, it's fine.
From what I was told, that I've got 3 RAIDs times 300 gigs each on this.
Yeah, but that's the hard drive. I'm talking about memory.
Oh.
You know what I mean?
Okay.
Because what was the exact server you bought? The
R710.
Okay, so it's a PowerEdge Dell R710.
Yeah.
Okay, let's check out your specs. So your quad core duo, 72 gigs of RAM. Yeah, here you go. This is what they're speaking of. Right here, you said 3-ray.
Yeah.
3-ray, 300 gigabytes of drive space.
Yeah,
what I'm talking.
3.
Yeah, this is what I'm referring to, the RAM.
Yeah. Oh, okay. So the 72 RAM, you're talking about 100 RAM.
Yeah, like 128, maybe. Yeah. I mean, let's say where you bought it from, just so people know in Toronto. Was it Canada Servers? Give me a second.
Server?
Yeah, let's pull up your server that they're selling here.
Server.
Because
no, that's not the company. It's called Delta Canada Server or something.
Yeah, no, this should be the same.
That's it. Yeah.
Yeah. I was on this earlier today. So for your Dell server, so you got the R10. This is the one you probably about $400.
No, I paid $800. Or after tax.
Let's see what you got additional. So as is, it's 48 gig of RAM. That's quite good, actually. So do you remember what extra stuff you bought?
The processor went from a 2.53 to 2.66.
Okay, so you just upgraded
that would have put it to 800 plus tax. So he just gave it to me extra because he didn't have it in stock or something.
So you upgraded the processor.
Right, it's at 2.66.
Okay.
Yeah. So it's a 3x300, 72 gig, 2.66 processor.
Oh, so you have a 72 gig RAM.
Yeah.
Okay, that's not bad. You have 300.
I paid 700 plus tax.
Right, so you've got 3 times 300 gig of drive space, which is just over a terabyte.
Yeah, 3 times 300. Yeah.
Yeah, so it's like 1.2 terabyte. That's a pretty good deal.
Yep.
The 72 gig.
Mm-hmm.
Yeah, that's fine. But did he give you any operating system options?
Yeah, Windows. I said, don't worry about it.
They didn't offer you the VMware?
No, it never came up. I never asked.
Here. This is the one we're talking about. I don't think you can see my highlight or where my little arrow thingy is right here.
VMware? No, I didn't ask for it.
No. This is what we're talking about. What I suggested: Citrix
Right.
Zen server compatible.
Citrix. Yeah. Okay.
That's see the one above the ESX from VMware.
Yep.
That I can't. I don't know the cost of that because you're going to pay per processor. That's going to run you quite a bit of money. So you're better off just to start with the free Zen server right here.
Yep.
And then put one virtual machine on it, or sorry, one virtual machine with one instance of a Linux distribution of, let's say, Ubuntu on it, and that should set you up pretty good for the beginning. And then you could go crazy with the Redis with the RAM, which is a good thing, because then you can push a lot of data into the RAM.
So one instance of Ubuntu on one of the drives, one of the RAIDs.
Yeah, I'd span it all out on all the RAIDs. Just have the one virtualized environment and put the desktop version on it for convenience. Because if you're new to all this,
as opposed to the server version.
Yeah, I wouldn't go with a server. Like if you're just starting out and experimenting, it's okay to put the GUI on it. I mean, this is not going to be a production server.
Okay.
Just to learn. You know what I'm saying?
Yeah, well, I'm hoping to get into production hopefully by the summertime.
That might be a little aggressive.
Yeah.
I'd say maybe the fall.
Yeah.
Because summer's only a month away.
That's true.
Yeah, it might. I'm going to be realistic with that. It might be pretty aggressive.
Yeah, and I do have a full-time job, so.
Yeah, that's another thing.
Yeah, it's not like I can do this all day.
Even if I was to do this full time, with what you have, I don't think I'd be able to. And I have all my scripts and my knowledge on top of it. I mean, I could put together the basic architecture I showed you with the Redis, with the Java test client, and with a couple of Python scripts. I could get that done in probably a week. But to get the proper analysis to the level I want, it would take a lot more than that. It would take a couple of good months.
Well, I might have a couple of people at work I can draw from. It's just a matter of coaxing them to come on over, get some booze into them, and they'll be my players.
Right. I got you. Well, hopefully this will help you out. I mean,
yeah, for sure.
I mean,
I think I'm halfway there. It's just a matter of kind of. I'm only halfway through the training modules in Python, dude. So
yeah.
I'm on. I'm having a hard time. There's so many videos in there.
Oh, I know, dude.
And I can't just sit through a video. I have to take notes.
Right.
I try doing that. Just the gems that come out of it. I just can't remember them. So
yeah,
I gotta take notes.
Yeah, but you got to understand the volume of information here is immense, and that's one of the big reasons why I did what I did with starting that analytics service, because I've been trying to push that kind of service as a membership for about 3-4 years. And I'll say out of probably, let's say 500 people that try to go through that, not very many people have accomplished and pulled through to build out a full, complete trading system as they want it. But the reason is because the volume of information to know is quite a bit. So that's why I'm just putting up the data myself and have people access it. Because it sounds like you're pretty well driven to do it.
Yeah.
And there's nothing wrong with that. It's a big step, and not a lot of people get across that finish line.
Well, I figured the harder it is at the beginning, the easier it'll be at the end.
Yeah, I agree. With what I've distilled down to what we've talked about tonight, I probably filtered out, if I looked at my 7 years of learning this, I probably would have filtered out of 7 years, let's say, I would have filtered out at least 5, maybe 5.5 years.
Yeah.
Just from all that was just not crap. It just wasn't practical at where things are today. Meaning, when I started, I didn't anticipate mobile would be the ultimate device that would control a front end to a trading system. I never saw Python be as a formidable language as it is now. And I never saw Windows go through the levels of just distrust out there with the Windows technology and .NET framework. Like 4 or 5 years ago, that never was seen. And the thing was Linux was nowhere as mature as it is now in terms of ease of use. There's just been so, and not just that, but when you look at the term algorithmic trading and quant trading, and it's I never saw it get as big as it's at now. It was so primitive back in the day. You know what I mean? But the key is to keep it simple.
Yes, sir.
So that's why I use the Redis, because it is that simple. Like compared to other NoSQL and database choices I've seen.
Well, I have to thank you, Brian, because a lot of the hard work that you put in, just going through, slugging it out in the trenches, figuring all this stuff out, I benefited from not having to do it all.
Yeah, I agree. No problem, man. It's just for me, I mean, now it's different. We didn't have things like Quantopian, and it was all do it yourself back in the day. And as I said, the Linux wasn't as advanced and as easy as to use back then as it is now. And like you look at interactive brokers on Linux, it was like stepping back into the 1700s. It was so primitive. And now,
when I first joined Interactive Brokers, this is back last fall actually. I've been on the sim account since the fall. I just had the darndest time trying to figure out the line by line trading commands that you had to do in it, and I was getting frustrated. And I got to say, the school that I went to, they decided to disband from it. They just got rid of it because it's so complicated, even for people who do this for a living, to try to figure out how to use it.
That's a school that you paid some big bucks to go through, and they were using interactive brokers?
No, they weren't. They were using TradeStation because all the instructors were American usually.
Right. Well, I'll tell you this about them. I wouldn't trust them in a million years. Like you start out with them, you're already at a huge disadvantage. Why? Because they're usually the broker that you'll end up being with. And all the other
actually, no, like their stance regarding the different trading platforms is they take an unbiased view. They just tell you what they learned. They don't tell you what they don't tell you to use them. So, but that in itself is it's a two-edged sword, because if you're learning from guys, they're not telling you to use this, but then to learn the application, they charge big bucks to do platform immersion.
Right.
That's the thing. So yeah, they'll teach you how to use interactive brokers, but I wasn't willing to pay what they want. I went to them for the trading strategy. I didn't go with them to learn how to use the platform. So what I did instead, with that side of it, I went to a local school in Toronto, who are the guys behind, what do you call it? What did I say? So there's a school called Learn to Trade. This guy's local. He's a guy who was kind of responsible for building the Toronto the TMX website, TMX Money. Okay, and so that guy knows his shit. And so I'd suggest if anybody wanted to, learn how to look at markets from the macro level, that'd be a place to consider.
Right.
And I threw him $500 and he just taught me how to use, the Interactive Brokers, TWS.
Oh, I see. Okay.
So I just threw money his way, and so that was good.
Right.
In that regard. But you know what? I say don't put all your eggs in one basket. Learn from different sources.
Right.
And never stop.
Yeah, I agree with that.
Because, if you think you only need to go to this one place to learn something, you're dead wrong, in my opinion.
Not just that, but you're limiting your capability.
Yeah. Exactly. So, I mean, hey, I go to different website sourcing, and there's people out there that got little gems of ideas.
Right.
And I learn from all of it. And I don't throw all my money towards, one source. Like I'm looking around, and at the end of the day, I'm gonna do this till the day I die. I'm just gonna continue to learn, continue to grow, and if I can help other people, I will too.
Right. Yeah, and that's what I'm trying to do as well. What I found after 6-7 years of doing this, and I don't know how many people have come and gone, what I find is there's different sets of people. Like there's the young guys and gals, I'll say, not very many of them, but they'll come in all bushy-eyed, wanting to get stuff done, but all they're really seeing are the dollar signs and the Lamborghinis that come with it.
Yeah. And
then they give up, not realizing the amount of work. And then we get the older guys who are some career, and they come in with the same perception and they give up. But then there's guys like you who see it and want it. And I think your approach is the right way. But trying to control your own infrastructure and the coding, it's not an easy gig, but that's where I keep saying you need to have the drive.
Yeah.
And it doesn't mean don't give up or it can't be done. Of course it can be done. But I think trying to put together simple solutions is the best way to go. It's easier said than done.
Yeah.
But with the technology that I've seen over the years and stuck to them, like Redis is a big one, and now Python being the simple language that it is, and the mature tools that are out there in the packages. 7 years ago, that never existed. Even 4 years ago, it never existed. And if you wanted something like that, you had to go with something like MATLAB, which would cost you well in excess of $100,000. But now that everything's all open source and where it's at, now the chances have just gone up like immensely. You know what I mean?
The stars are aligning, and it allows us this.
Absolutely. So a few years ago, it was never possible. When you get services like Quantopian and the newer ones like Quantiax and Quant Connect or whatever, like things are changing really fast. Where it will end up, I don't know, but I do know the key here to any successful algorithmic systematic trading is you can't use people as crutches, and you can't use pieces of technology as crutches, because if you don't really understand the mechanics of the behind the scenes, you're at a huge disadvantage. So as I said about brokers, if you don't know about the brokers, like let's say TradeStation, you just go with them and you don't know, they're going to be doing, I'm not saying TradeStation does it, but any broker you go with can rip you off in probably 6 different ways. And what you're being taught, you're always thinking you're going to make money with. And even though you apply what you learn and you apply them and implement what you're learning, but yet you're not making money, it's not that the methodologies are wrong. It's the broker that's ripping you off. You just don't know about it. You know what I mean? And that's probably one of the biggest lessons out of the whole thing that I could take away from all this.
There was a big ruling by the SEC. I think the seas parted in 2010. I don't know if you know this.
Right.
But back in 2010, there was this big shift.
Uh-huh.
The SEC, I guess they mandated that all brokers, they had to make available, what do they call it? Like an open desk. What's not an open desk, but This is where the broker isn't on the other end of your trade.
Okay.
There's a phrase for it.
Market making?
Well, it could be market makers, or it could just be your local forex broker. I'm talking about the trade desk, where they're not allowed to be like your broker can't represent the market maker and then also supposedly be your broker.
Well, they do that anyways.
I realize that, but
you do realize last week they announced that Interactive Brokers sold off Timberhill.
I heard about that.
Yeah, that was sold to, was it 2 Sigma?
Yeah.
So maybe you know better. And the question I posted on my blog was, does that mean then Interactive Brokers customers are being jeopardized because now they're going to resell the Interactive Brokers order flow back to 2 Sigma?
Okay. Well, the question I would have would be, they have something called smart routing.
Yes, I know that.
Okay. So how does that affect the smart routing? Is it going to be confined to one exchange or another, or is it still, does it pick and choose based on availability?
That's what they'll tell you.
Yeah. Is it actually doing it? That's the thing. So we don't know. That's where the rubber hits the road right there.
Right. But the question is, how do you find that out?
Well, in your trade, it'll tell you where, like, let's say you had an options trade and one leg went to New York exchange and another leg went to Chicago.
Right.
Okay. It'll tell you what percentage, and if it couldn't achieve what it was looking to do, like if there were no buyers or no way of getting it, then it'll just, it'll basically take what you tell it to do and say, no, I'm like, abandon this or do it, just whatever.
Mm-hmm.
Okay. So now there's something in between a bid and an ask. So when you put in an order, you could be more generous towards the broker or less generous. So you can kind of negotiate a little bit. Generally what I found is that if you give a little bit extra, like between, like, let's say you want to go for you're buying it.
Mm-hmm.
You're going for the ask, you're buying it, and you give like an extra point or two, that trade will transmit much quicker. Okay.
Yes.
So what I would do as a metric, I might look at that and I say, how am I being favored when I do that? How does this exchange treat it versus another exchange?
Yeah.
Because if you can figure that out, if you log enough of them, like just take a screenshot when you're putting in a trade, take a screenshot to see where it went, because you can find that data to tell you.
Mm-hmm.
Okay, and then you'll get a good idea as to how to play with it.
I'm sure, but I'm sure there's also could be said that there's different scenarios. If you do use the smart routing, that maybe you would think like 75% goes to the NYSE, another percent 25 goes to CME, right?
Yep.
But then you could put the same trade in, same volume, and use a smart router, and you get a different result. So the question is why? And
well, sometimes it's because of the instrument.
True, but it might also be because of market conditions.
Yes, market conditions. Yeah, so you need enough of a data set to be able to figure it out.
Yeah, I just think that's a pretty tough one, because once you put that order to the broker, it's out of your hands.
Yeah. Once you've done this 100 times, though, if it still seems totally random, then give it up.
Yeah. Yeah.
I'm just saying.
But I do worry about this notion about how Timberhill has been sold off.
Yeah.
Because I think Interactive Brokers should be coming back and saying, no, we're not selling or we're not letting the order flow go back to 2 Sigma, because that's what happened with Scott Trade, what was it called? Scott Trade, where was it Virtu or one of the HFT players? Scott Trade had its retail clientele, order flow comes through, and these mother effers were literally reselling those orders back to HFT operators. they would then obviously do the skimming and whatnot to the order, take their little profit, send it back to Scottrade, and then it would proceed to their prime broker.
Well, I look at it this way: there's such a big mother effing broker that I think there'll be a microscope under them.
I would hope so. Well, the thing is that look at Interactive Brokers. They're listed as a stock on the exchanges. But then on the other hand, you look at FXCM. FXCM were listed on the exchanges as well. Look what happened to them.
Yeah.
They got busted. They were doing all this illegal stuff while they were listed on the exchanges. So I don't know. I don't know. Nobody knows. Look at Awanda. They were a good company, and then they got sold off to some new investors, and that's when they started going. I'm not saying, but they just got sloppy, and I think they're probably losing a lot.
Well, maybe they will look at FXCM and maybe take note that eventually they'll be found out.
Right, but at the same time, we're all trading through them.
Yeah,
knowing about this stuff.
Well, as far as I'm concerned, they're the only real game in town that we can do anyway. So
that's right. Yeah.
So there's not much we can do at this point.
Well, you're wanting to trade futures and options. If that's the case, that's the only game in town you have.
Yeah. Yeah.
But I'm just going to play around for the next little while with the FX.
Mm-hmm.
So I know that Dukas copy is not going to be the best either. But like I said, I don't know if you've been following me. But I do have methodologies where you can use Dukas copy, minimize the info with Dukas copy, meaning you don't put a stop loss and send it back to the broker, because that's when they'll start monkeying with the order. So as long as you're able to minimize that, then you're good.
Okay, so what do you mean, like put a stop loss in?
Well, a lot of people that are lazy or, again, ignorant of how the markets work, especially at the broker level, they'll gladly put a stop loss into the order, and right there you're now signaling to Interactive Brokers or whoever on when you want to get out. So that's right there a message to the market makers to monkey with the order. Whereas if you are able to control your own stop loss virtually in your own system,
right,
that's the way to do it.
So they can't see where you put your stop loss.
Right, but your system does, though your broker doesn't know.
Yeah, that's where I'd like to be at.
That's why you want to do your own trading. A very good example where we're at in this discussion. We're now almost 3 hours tonight. So you get a guy that who was on here earlier, right, asking all these questions. What are the benefits? So what? 3 hours later, he's no longer on board. He's no longer hearing these discussions, right?
Mm-hmm.
So quite possibly he may go out and start trading on his own with his own algorithmic system and not know about this stuff. This is what the brokers do. They call it stop hunting.
Yeah.
And this is how the brokers make their money. It's one of 6 ways. Yeah. That's one of the big reasons why these brokers are based out of Cyprus and somewhere in the Caribbean where they're not regulated.
Yeah, that happened to me early on.
Right.
Where my stop losses just out of the blue disappeared. And so I called them up. I called them support and I said, "Hey, what's going on here?"
What did they say? What was the response?
Oh, it's like, we'll definitely look into this. This is a crime against humanity.
Yeah.
Right? And nothing. I guess a higher up, he emailed me back saying, we definitely take this stuff seriously, blah, blah, blah. And then it happened to me one more time.
Right.
Okay? But I got wise to it.
Right.
Okay? So from that point on, I was watching my charts like a hawk.
Right.
And it never happened to me past those, only because I was on it.
Okay.
And fortunately, I never got burned from it.
Right.
But I wound up going through about 7 or 8 months of trading with FXCM, not really getting through those. The idea of letting profits run when they have a chance to go. And so like I was happy just to break even and get the hell out of Dodge with FXCM. I just couldn't deal with them anymore.
Yeah, but imagine you get people that are very lazy but still wanting to make money and not fully educated on stuff, putting their trades through and not realizing why they're not making money. As I said earlier, they could learn all the methodologies they want, and they should theoretically work. But once you throw them to the broker at the broker level, they're monkeying with those orders, and you're at best making nowhere close to the profit that you should be making.
Yeah, that's what I gathered. My gut instinct told me that there's better pasture somewhere else.
Yeah, but as you said, unfortunately, being the little guys that we are, as you said, IB is the only game in town.
Yeah.
So
I'm gonna start to get into this. So hopefully, as you said, maybe by the fall I'll have something down.
Yeah.
I can trust, and I've got a lot of data on research on it. So I'll post stuff as I get it, and we'll see where we go.
Yeah, it'd be good because we can definitely share ideas here and there.
Yeah.
Yeah.
All right, I'm just about spent here, Brian. So
well, I hear you, man. I'm in the same boat.
All right, so
go ahead.
Thank you very much for this.
No problem. This helps you out, huh?
Yeah, and you use this. I hope other people got stuff out of this like I did.
Yeah, I'm sure. I'm hoping they do.
I'll put something out there if somebody wants to. If somebody has questions for me, you can make they can get a hold of me.
Okay.
Yeah. Okay.
Okay, man.
All right. Listen, you have a good night, and
same with you, man.
Everybody else have a good night.
All right. Have a good day.
Bye-bye.
Bye.